Okay, Ed.
Okay, thank you. This is Ed Hamrick, Assistant Attorney General, and I represent the State Board of Land Commissioners, and today is Wednesday, September 9th. The board has just come out of executive session to discuss two real estate matters that were noticed for executive session.
Who motioned to close and seconded? I missed it. Did you see?
Hey, Barb. Ernie and
Thank you. Let's see. The discussion was limited to the matters that were noticed for executive session for the discussion of real estate transactions or potential real estate transactions that the premature disclosure of the information discussed would lead to or possibly lead to a competitive advantage to parties who are adverse to the state land trust. No decisions were made in executive session, and the matter was recorded and will be preserved at least for 90 days as required by statute. The board is now back on the record and ready to proceed with its regular agenda.
Thank you, Ed. All right, I'll call to order a workshop session of the Colorado State Board of Land Commissioners. It is Wednesday, September 9th, 2020. The meeting is being conducted via Zoom.
And Commissioner, if you'll
commissioners present. Yep.
if you give us just a minute. Or Tracy and Kim, are we converting this to broadcast now?
Okay. Do you want me to repeat that, Ben? Okay. Good morning. Today is Wednesday, September 9th, 2020. I'll call to order a workshop session of the Colorado State Board of Land Commissioners. The meeting is being conducted via Zoom, and we have all 5 commissioners present this morning. Our first item is a permanent fund performance review, and that's tab 3, and I believe Director Ryan will provide a brief introduction and summary. Thank you.
thank you, commissioners. I am just looking at the participants to see if Alex Browning and Kristen Wiley have joined us. Nick, can you see
Alex is on as a panelist.
Great.
There he is. Welcome.
And Commissioner Treasurer Dave Young is here. Okay. Good.
Kristen Wiley.
Thanks.
Yep.
Thanks. Just want to make sure we got all the right people in all the right places. So for the record, I'm Bill Ryan. I'm the director of the State Land Board. Commissioners, we're going to delve a little deeper into the details of the permanent fund, how its assets are allocated, and its recent performance. And at the broadest level, we care about the performance of the permanent fund because that is part of the assets of the school trust. Is one of the ways that we generate money that helps provide funds for school children. And you can see we've got happy children in a classroom with no masks. I think we should probably have a different picture there of kids at home and parents in the background looking frustrated. But at any rate, Kristen?
We haven't started screen sharing yet. Would you like that?
Yeah, sorry. I thought you had done that, Kristen. I have on my end. There we go.
All right.
There's the aforementioned children in a classroom. So presenting today in conjunction with me will be Alex Browning of Callan. Callan is the investment consulting firm that advises the Treasurer's Office about the permanent fund. Kristen Wiley is also available to answer questions. She helps administer the permanent fund for the Permanent Fund Investment Board. And she's authored a lot of the data and reporting that's embedded in this. You'll recall back in July, I presented to you the implication of House Bill 1418, the School Finance Act, on both the Land Board and the Permanent Fund. And Treasurer Young and Assistant Deputy Treasurer Eric Rothaus, I think, were both present for that. but I wanted to refresh on this for a couple of reasons. First, from a governance perspective, it's important for the commissioners to understand all aspects of this trust that you're fiduciaries for. Even if you aren't directly responsible for the assets, it can help us make better asset allocation decisions and help grow the whole trust so it achieves intergenerational equity. Second, as the permanent fund diversifies and its investment returns grow, I think it becomes a viable alternative investment that the board may wish to consider for when it has non-simultaneous exchange funds. In fact, we're sitting on almost $30 million right now. And as I'm going to tell you in a second, there won't be any other source of growth of the permanent fund this year. And so it's possible that we may make future decisions to drive NSE funds into the permanent fund. Slide, please. There are really three takeaways this morning. There are no decisions to be made, but they are that the recent returns for the permanent fund have been quite good. Yay. Next year, there won't be any dollars flowing into the permanent fund, so boo. And how does this affect the larger asset allocation decisions for the whole trust? And that's what we want to think about and discuss and decide. Slide, please, Kristen. This picture is in your packet, and it shows the parts of the whole trust valued at $4 billion. I'll read this clockwise. Over on the right is about $2.4 billion, or 60% of the trust is the surface estate. Down at 8 o'clock, about 3% of the trust is our commercial real estate portfolio, 120 million or so. The next is about 260 million in oil and gas, 7% of the trust. And again, recall that valuation fluctuates pretty widely based on the price of oil and the rate at which it's being extracted. We use a 10-year discounted cash flow to value that part of the trust. And then finally, a growing piece of the pie here is the permanent fund. It's $1.25 billion now, or about 31% of the overall trust. And that's where we're going to focus our discussion today. Quick recap of the permanent fund. Historically, it's been managed by the treasurer. The Permanent Fund Investment Board was created in 2016, and that allowed us to diversify and allowed the permanent fund to be invested differently than it had been previously. I want to point out that the corpus of the permanent fund has doubled over the past decade, and that's been almost entirely from the land board making deposits of our operating income, as well as a little bit of marijuana excise taxes over the past couple of years. I'll show you that in a chart here in a second. But that growth hasn't been from the growth of investments or reinvestment of earnings. In fact, 100% of the earnings are distributed each year. So our inflows have been the source of growth there. And that's not going to occur in the coming year. So with nothing coming in on a nominal basis, the permanent fund will actually shrink this year. Even if 14-18 weren't in place, the reality is that our revenues are going to be down dramatically. This means that there will be less going to BEST, and in fact, we're going to hear from the director of BEST here in the next session. And so there would be less going to the permanent fund anyway, because our revenues are lower, but 14-18 compounded that problem. Slide, please. This is a terrible slide, and our friends at Articulate who've coached us on all this stuff would be very disappointed in me. But the information is in your packet, so I know you've already studied it. And this will show you what I said about our revenues declining. And this is the forecast that Nick and I have given to the governor's office and to the OSPB, the planning and budget offices. And I want you to focus on columns A and C. I think those are most likely scenarios. B and D are downsides, and I hope that's not what's going to happen. So let's optimistically focus on column A. Slide. Last year, our operating revenues, that's the year that just ended June 30th, our operating revenues here at the Land Board were $138 million. This year, that's likely to be $50 million lower, 87 million. Slide. That is almost entirely due to oil and gas. Last year, we did 33 million barrels at an average price of $46 a barrel. Today, Niobrara oil is sub 30 and the production has dwindled pretty dramatically. I'd be surprised if we do 26 million barrels this year. Oil and gas is going to be down significantly. Other areas are also going to feel some pain where we've got a drought. And so we may ask ranchers to destock and give drought credits. Of course, our commercial real estate portfolio is liable to be impacted because of the pandemic. It's not just oil and gas, but that's the significant part of it. So if you flow these projections down and put them into the current distribution formulas and statute, what you'll see is that BEST will get $25 million less from us this year than last year. So a significant decrease for BEST. Slide. This next slide, Kristen, I guess that I want to point out also that the net to the permanent fund will be zero. This year, $61 million went to the permanent fund. Next year, it will be zero.
Bill, can you remind me, what is our annual obligation to BEST? Is there a fixed amount?
No, it's not fixed. It's 50% of our operating revenues plus spillover earnings from the permanent fund that exceed $21 million.
Okay.
Slide. This is Exhibit 5 in your packet, and it highlights again what I said earlier, that our deposits were the engine of growth for the permanent fund. You'll see that in the last 4 years there in the circle, the Land Board deposited about $230 million of operating revenues, and marijuana excise tax was about $60 million. I just want us to think about whether we should make a conscious effort to add to the permanent fund this year and in coming years by earmarking NSC funds to go there. And to help frame that discussion, I want to turn it over to Alex Brown, who's going to talk, Browning, sorry, Alex. He's going to talk about the current asset allocation and the returns for the permanent fund in the past year. So, Alex?
Thanks, Bill. Can everyone hear me?
Yep.
All right, perfect. Good morning, commissioners. So I think for my part of the presentation, we're going to look at just the financial portfolio. So that's the companion to the State Land Board physical assets. But same objective, intergenerational benefit for K-12, benefiting current populations to the same extent as future populations. And so the reason that's really important is that helps us get to the asset allocation we're looking at on this particular slide. We arrive at this also with just getting an idea of the risk preferences from the Public School Investment Board and the distribution priorities that Bill spoke of earlier, such that we're trying to the balance between the sometimes conflicting goals of income generation and growth. And so that's how we end up with the asset allocation. But we also have some guidelines that we have to be, we have to operate within. And there are three primary ones that I'd like just to point out because that also helps us understand as to how we get to where we are today. And that is that one, all realized losses have to be recovered by realized gains within 12 months of recognition. So that really sort of frames the amount of risk that one can take in a portfolio if you might foreseeably see multiple years, like say the tech bubble, where you have 3 years of declining returns to equities, which were swamping the returns to fixed income, for example. Additionally, there's the $21 million of income that goes to the state, the School Finance Act, and this is an annual obligation. It doesn't vary with asset size. It's just year in and year out. The portfolio must fulfill that obligation. And then finally, no direct equity ownership. And so that also affects the asset allocation because it doesn't allow for the investment directly in real estate or private equity or anything that's an LLC, an LLP, or a C Corp. But that said, ETFs or exchange traded funds and mutual funds are acceptable. So in total, in operation, all the interest from fixed income and dividends that are earned are swept, then distributed according to the legislated waterfall. So if we go to the next slide.
Alex, can you, sorry to interrupt, can you go back and restate your comment about unrealized losses must be covered by unrealized gains, or just make sure that I'm square on that?
Sure, absolutely. I may have misspoke. So it's realized losses
Okay.
must be covered by realized gains within 12 months of recognition.
Okay.
So the following slides, I'm just going to show the monthly activity in the account, but also if you end up picking up one of the performance reports off the Treasurer's website, just to give you a little bit of orientation. So if we move from right to left, what we're showing is June 30th, the weight of each of the individual composites and the investments underneath. The composites are bold. So for instance, we look at total equity at 246.6 million, and that's composed of domestic equity and international equity. And then, on down the line. What you'll notice is as you start to move left, you have the market value, then the investment return for each of the individual investments, the net new investment. So that is contributions minus interest earned, because that gets swept into an interest-bearing account awaiting distribution to the School Finance Act, which then leads you to the weight and the market value as of July 31st of 2020, so in the last month. I think that what you can see at the very bottom is that the trust ended up starting June at 1.26 billion. There were investment returns of roughly 27 million, net new inflows of 2 million. Again, that's interest coming off the bond portfolios and going into the account waiting for sweep. And then finally ending the month at 1.287 million or billion. And that really is a net gain of about 24 million for the month. On the next page, what we show is the exact same exhibit, but I have circled a bunch of footnoted numbers. And so what this is here to show is how did we get to where we are today? So prior to 2017, permanent fund was 100% in bonds. This ensured the 21 million going to the School Finance Act, but hampered growth after inflation. And so in effect, maybe not hitting that bogey of intergenerational wealth for current and future beneficiaries. With the creation of the Public School Permanent Fund Investment Board, there was an allocation to equities that was made in December of 2017. And so you can see the ones annotating the new investments that were made in December of 2017 to move the permanent fund from 100% bonds to an 80% bonds, 20% equities. Then in 2018, you'll see a number 2 next to Janice Henderson, and that was to add a fixed income element to the existing bonds, but that were shorter in maturity, and then had the opportunity to go just a little bit lower in the credit quality scale to increase the yield. And then finally, just as of this July, we added high yield bonds and preferred securities to the account so that we could increase the yield and thus make sure that we were able to fulfill that obligation to the School Finance Act of 21. So in total, moving from 100% bonds to a more diversified portfolio where we're getting more aspects of growth, but also keeping that high-grade portfolio to ensure the $21 million distribution, and thus going towards the eventual goal, really, of having growth after distributions and inflation. On the very next slide, we just show where the money came from for high yield and preferred securities. That was from cash available for investment. So that's corpus money that was dropped down from the State Land Board. And we'd actually had that slated for private real estate, direct investments in commercial real estate across the US. But because of the prohibition, I believe it's constitutional prohibition against direct investment in equities, we just couldn't make that work. So the next best alternative was seeking high yield and preferred securities such that they could provide us with some capital gains, but also a higher level of income to help supplement the market duration portfolio, which is incidentally just in the middle of the page under total fixed income. And that's managed by the Colorado Treasury, and the principal portfolio manager being Rudy Moore. On the very next slide, just to summarize, at the very bottom, we just kind of move across, again, left or right to left, and you have the market value, you have your investment returns, you have your net new income, and then finally the ending value of the trust at nearly 1.3 billion. When we look at this, the one thing that I guess kind of is surprising is that 50% of the investment returns were from the stock portfolio and the other 50% from the bond portfolio. And a larger part of this, at least for bonds, and we wouldn't expect this going forward, is that as interest rates dropped about 1.5%, you got this additional boost to your return because those 3% coupons are now worth twice what they are today because you have 1.5% coupons available in the market. And so that's how we get the returns to the bond portfolio, which are unrealized, of course, but just, there are different dynamics going on where equities seem exuberant about the resolution of the coronavirus, while fixed income is just benefiting from the fact that global governments, including the US government, is really lowering interest rates such that you get this boost from your fixed income. And so finally, just to go to the next page, to look at historical periods ending July 31st, as you can see at the top, and the returns to the total fund in each of the individual asset categories. And if you go out to the last year, you'll see that the total fund earned 9.62%, above its benchmark of 9.3, and contributing most of that is fixed income. But it's fixed income through capital appreciation or unrealized gain from the drop of interest rates, as opposed to 10% interest getting generated over time. I think if you go out to the last 5 years at 4.22%, now 3 of those years have had the benefit of equities, 2 haven't. But I think as we look forward, that say 4.25% plus or minus is probably a good approximation of what we would expect in terms of total return moving forward. So if we just think about the components of return, last year ending June 30th, the in dollar terms, the returns to the total trust translated into about 1/3 income, 2/3 unrealized gains. So that's roughly $30 million of income and $60 million of unrealized gains. And so altogether, we would expect that 1/3 income, 2/3 unrealized gain, maybe it goes closer to 40-60, but that would be probably a reasonable expectation of the growth going forward. And so with that, I'll just stop and see if there are any questions.
Thank you, Alex. Any questions off the top?
Neither of us.
I think Treasurer Young had to jump off. You may have just said this, but I want to confirm. Did you target ROI, or what you think we could expect moving forward, is between 4 and 5%?
Yes, that would be correct. Now, at the beginning of next year, we'll come out with new capital market assumptions. And so we'll be able to refine that a little bit further. But just if you think about a portfolio that's 80% fixed income, and what rates have done recently, and that coupon yield is a pretty good predictor of long-term returns to bonds, the 20% equity is really, it's a nice addition, but the fixed income environment is really what drives your total return.
And are we, because of those various obligations or limitations that you outlined, is that why, or does that sort of keep us at the 80-20, 80 fixed income, 20 split?
It definitely influences it, because if you think about it, right now there's, let's see, just roughly 850 million or $1 billion in total fixed income. If the current interest rate environment is about a 2% yield, or even lower, actually probably a 1.5% yield, that portfolio by itself isn't quite generating that 21 million. And so you really do have to have a high amount of fixed income to make sure that that School Finance Act obligation gets met. And I think the understanding is that needs to get met year in, year out, regardless of asset size or economic environment.
Commissioner Butterworth, I guess I'd say that this sort of hamstrings us. The fact that there is a fixed obligation in statute, we've got to build a portfolio that makes sure that it will achieve that. And that portfolio, therefore, has a disproportionate amount of fixed income, which then hampers the growth. So it's sort of this compounding problem. And we've talked before about how do we rewrite the distribution formula so that we can continue to earn money, but do it in a way that enables for growth of the corpus as well. Commissioner Heath, I saw your hand.
Yes.
Sorry, I can't see
Good
everyone.
morning, Commissioner Heath. Who determines the restrictions on how your investments are made? What guidelines does the Treasurer's Office and the Performance Fund Advisory Board have oversight over, and what are constitutional restrictions?
I'll start off, but I think Bill can certainly give a lot more detail. Some of the restrictions are legislative, some of them are constitutional. My understanding is that the restriction on direct equity ownership, which prohibits private equity and direct ownership in real estate, or anything that's structured as an LLP or an LLC, is constitutional. The $21 million of income to the state, the School Finance Act, is part of the enabling legislation, if I'm saying that correctly. And then finally, the realized losses being offset by realized gains within 12 months of recognition is also within, I believe, the legislation.
It's within what?
The legislation that set up the permanent fund.
That's constitutional. The losses, all losses are required to be made up by the General Assembly, is what it says. The fact of the matter is that shouldn't be that big of a hamstring on us, because we're not owning individual securities. We own ETFs and mutual funds that are unlikely to go to zero. If they go down, hold them. Just don't sell them. Now, there's some amount of buying and selling that goes on within the portfolio, but we can instruct the fund managers on how to manage that sort of on a tax advantaged basis, if you will. Am I saying that correctly, Alex?
Yes.
And so we can give them instructions to not do things that create losses. And it's not going to go to zero, because it's, you've got 1,500 stocks in some of these indexes. So, so I think that's a little bit less of an issue. But the bigger issues right now are these fixed dollar amount distributions that require you to hold a higher percentage of fixed income than you might otherwise on a typical endowment. Did that answer your question, Commissioner Heath?
I guess in part. Where I'm looking is, what other opportunities might we have to enhance the performance?
Yeah.
I think that's one of the critical questions, which is that if you view the $21 million distribution to the School Finance Act, for lack of a better term, as inviolable, going higher in equity or any growth type of investment puts greater risk on the ability to generate that $21 million year in and year out. So, we look at this periodically and every year formally, but I think, from what I'm seeing out there in the market and through our capital markets group who comes up with these forecasts, I wouldn't imagine that you would see a really significant difference in terms of the fixed income equity split.
Absent some changes in how the distribution formulas work.
All right.
It just seems incredibly, and I get this, and I know we've been talking about it for a long time, but an 80% fixed income, 20% equity for a fund that's built forever just seems unbelievably conservative, and short-sighted, I guess. And I don't, this isn't my forte, but I certainly work in a field where endowment is a big piece of this. And you see, understand that the market doesn't always go up, and there are ups and downs, but on the whole, exposing ourselves to a little bit more upside. A 4 to 5% rate of return. That's barely eclipsing inflation. It doesn't seem like we're aiming high at all.
I don't disagree. I think we're hamstrung somewhat by the distribution formulas. We've tried to pick up yield where we could in the bond portfolio. Alex and Kellen have done a nice job trying to find some higher yield investors, diversifying that into some short term. But you're right, we still have a much higher concentration of fixed income than I think a typical intergenerational endowment would carry.
Yeah.
So I guess my question following that is, Alex, are you and the Treasurer's Office interested in working to, I guess, change that formula? Because for many of us who've dealt with the endowment world, this just seems so conservative that it hamstrings all of us in terms of our meeting the objectives of our mission.
We're happy to help in any way we can. I think that changing the distribution formula is outside of our purview as investment consultants. What I would say, though, is that normally with endowments and foundations, the spending rule is generally a percentage of the market value of the fund over some rolling basis, such that, again, you get, current generations absorbing some of the volatility in the market values, but also at the same time, keeping, future generations from bearing all that as well. And so if you look at a university endowment, they generally do say 4% of the market value on a rolling 4-year basis, such that you get an evener, more even distribution pattern, but also be able to grow the trust in excess of inflation. That's why when you look at those portfolios, they tend to be, to generalize, 70% equities, 30% bonds, where then you can make your distributions and exceed inflation on top of that.
I wonder if it wouldn't, and then I think a couple of additional thoughts that, and I know Permanent Fund Review Committee is I'm sure had perhaps already had these conversations, but when we're looking forward and we see, our primary source of revenue over the last decade being oil and gas bonus and revenues, and and our projections that those are going to either plateau or decline fairly significantly, it would seem to me, the legislature is going to look at us when we can't meet what we've typically been doing and saying what's happening. Like this is going to come to bear, and I don't know if it's worth, running like a 10-year forward, scenario that shows, what, historically, I know past performance doesn't equal, or past results don't equal future performance, but somehow helping see what the impact is and what we can conservatively look at is that as our oil and gas revenues are going down, we're needing this endowment to perform at a higher level, a much higher level. I mean, and I don't know if we've looked at it that way or presented to, I'm not sure who we're presenting this to the treasurer, or if this is more of it, if this is even bigger than the treasurer. But I think that would be my concern. And then I also again, sort of, this is stream of consciousness. I think about the fact, the percentage of our contribution to the School Finance Act is still pretty small. Is that a fair statement? Like, this should be the playground to be taking more risk, not inordinate risk, but certainly to be doing all it can to, having a bigger impact on that. And I don't know, Commissioner Shaw, I know you've been at those permanent fund review committee board meetings, but it seems, we've got a lot of strong, large foundations in our state that I think are doing a pretty impressive job of ensuring growth while meeting current need, weathering the ups and the downs and such. It would just seem to me that there's got to be a way. And I guess this is Bill's steady drumbeat. We've got to fix the distribution issue. So
it's become the tail wagging the dog, but you've summarized beautifully the Optimize the Trust document that we've shared with you all to help try to frame legislative changes for this.
Yeah.
So, what's been happening was that our oil and gas revenues were up, and so we were making big distributions, and everybody loved that because stuff was linked to oil and gas in a great market. Now that market is down, they're going to see the volatility of the distribution formulas as they're written, and I hope that there's an opportunity in that to rethink this and say, wow, we'd have a lot less volatility if we were getting distributions that were tied to a rolling average market value of the permanent fund rather than to oil and gas production, which is how it is now. So you did a great job, Commissioner, of sort of summarizing the document we wrote about how should we change the distribution formulas so that the 21 million isn't the tail wagging the dog. And that's what it is now.
I know we're running.
And I wanted to drive home one of the points Alex made at the end, which was he thought going forward, again, I'm not going to, all the usual legal disclaimers, but I think as he looked forward with an 80-20 portfolio saying, hey, 4 to 5 is a reasonable yield, and a third of that we ought to be able to achieve on the cash versus the gains. Did I put words in your mouth there, Alex, but were they okay?
No, they're fine.
I got it. Oh, go ahead. Was that Commissioner Heath?
Commissioner Scanlon.
Oh, yes.
I just struck me, and I'm following your stream of consciousness thinking. One, it might be an interesting analysis to have actually the rear view look as well. If we had invested this differently,
Yeah.
what opportunity could we have realized that we didn't? But secondly, it just seems to me as this state has made commitments to different climate goals, there's a weaning off of oil and gas, I think, over time, regardless of the oil and gas market. And so if that's the future trajectory, I think we should plan for that accordingly, which is another rationale, Bill, to think about this differently. It might be appealing in terms of also complementing some of the governor's goals.
I don't know.
Thank you.
If I don't know if I'm tracking or if this is tough, but I did have a question, not so much to add to this, but I was curious if we have discussed or considered like ESG screens on this, in a sort of maybe going to, concerns around climate or values, those sorts of things. And then Alex, we've done stress tests to our portfolio, coming off of the 08-09 recession, when many endowments lost 50% or thereabouts, and we sort of do the worst case scenarios of something like that happening again, just to understand how we're currently invested in, or do we feel like we're carrying too much risk? Have you all done that? Do we do that? And would that be something that would be of value as we present to and build a case for, perhaps changing our investment strategies?
So with other natural resource-based clients, specifically some that are nearly entirely, if not entirely, funded by oil and gas, we can do scenarios of both the financial investment portfolio and different scenarios for the price of oil and what that means in terms of distributions. And you can look at percentage of market value on a rolling 2, 3, and 4 year basis, and so how that ends up, kind of on the back end of the machine generating those distributions. So that's certainly something we do with other of our clients. For the permanent fund board, we just do simple asset only scenario analysis, and so we've never really looked at the oil and gas contribution or the land contributions.
Okay, thank you. All right, any other questions or comments at this time? Bill, I do appreciate you, one, having this presentation, but I would be remiss, you sort of glossed over it, but I would draw people's attention that it appears during your tenure that the permanent fund endowment has doubled in value, and that wasn't, I appreciated too your comment that wasn't through the miraculous work of the market, and perhaps our current president, who would like to take credit for that, but through actual distributions from the work that the land board has done. And it'd be easy to, I think, just say, well, of course that happened. We had the oil and gas boom, and but behind that has got to be strong leadership, strong management. I think it represents the opportunistic and entrepreneurial approach that you've taken. So I hope those on the call and on the public record, that's not an insignificant accomplishment to be done largely through contributions through revenue and virtually no market performance. So I really do appreciate your work. I might throw in that I've been around for 7 of those years, so maybe I'll take a little bit of that credit too, but no, definitely you and Greg and the team that's been in place for a long, long time. So
thanks.
Congratulations on that.
It also, is a depleting of the asset.
Yeah.
And that's the bigger concern.
Yeah.
It's not reproducible.
Commissioner Heath, I see your hand.
Gary, I share your thoughts about accolades. However, I think we as a land board would be remiss if we leave this conversation without saying that we definitely need to make some adjustments, because this kind of formula does not serve the children of the state and educational needs. And, you know, while the zero distribution to best ought to be a red flag, you know, we've seen this coming and absolutely have to have some plan forward to change this distribution. And so I just feel like we need to make that case on the record.
Yeah. Thank you, Commissioner Heath.
Thank you, Commissioner. I appreciate your support. As you know, that's a political process, and I'm trying to raise my hands and get the attention to get that done. But in the current economic environment, it's going to be difficult.
Yeah.
This is Commissioner Scanlon again. I want to echo Josie's comments around the urgency of this question, but I know the treasurer dropped off. Dave Young was on, I think, for a bit, but on our investment board call, he did mention, Bill, that he believes the stakeholder process is needed to really address some of these concerns. So I think there might be momentum too.
Well,
I mean, on that,
Commissioner Scanlon, just let me say that I support stakeholder processes. They're great. If that process, though, is how do we fix the education funding formulas, that could go on for decades. And you know, it's as you know better than anyone else on the call, that has been a challenge that the legislature has grappled with for years and years. And if we get hitched to that, I'm afraid that there won't be a trust by the time that gets solved. I mean, I'm only half kidding. I understand that there are some things that that are impactful and would be good in a community process. But if it gets that large, we're liable to get stuck.
Well, I share those concerns. I think what we're proposing, though, could be a very small process of engagement with key interests. And Bill, you've tried to do that outreach on your own, so that we are actually able to address this one piece of the larger funding question in a productive and proactive way. So I think I agree with you. I've been a part of 3 of those different processes starting 12 years ago. So yeah, I'd like us not to be entangled in that conundrum. But I think there's also a different path forward around this that we could really promote.
Thank you.
I did see, I know Kristen Wiley and Eric are on the dais here with us. Before we wrap this up, just wanted to give you, either one of you, an opportunity if you wanted to add anything to our conversation, or if you were simply sort of just listening so you heard the nature of the conversation. Kristen, you good?
I'm good, thank you. I was just listening. I appreciate Bill's comments.
Just listening. Thank you so much, Commissioner.
All right, thanks, Eric. Appreciate you all joining us. Alex, thank you for your presentation and your time this morning, very helpful. And Director Ryan, again, for teeing this up. We're gonna, I'm thinking we'll do best. I saw Andy is at the dais as well. We'll get through the best update, and then we'll take a quick break before we dive into Chico Basin, if that works for everybody. So our next item, Building Excellent Schools update, that's tab 4, and there's Andy. Welcome, Andy. Thank you for joining us today, and I'll turn it over to you.
Of course. Can you hear me okay?
Yep.
Good. Having a lot of technical difficulties at my home. I don't know if it's snow on the lines or what. Okay. So I'm on the phone, I'm watching on the computer, and Kristen is going to share her screen and share the slides. I've been cut off from the meeting probably 5 times while you all were discussing, so just to be safe.
Okay, thank you.
But at least you can see me since I did put a tie on this morning.
We appreciate the respect.
Yeah. You can switch the slide, Kristen. Thank you all for having me this morning. For the record, Andy Stein, Director of Capital Construction for the Department of Education. And one of our main focuses is to manage the Building Excellent Schools Today grant program. So the Building Excellent Schools Today grant program is managed by my staff and then the Capital Construction Assistance Board. That's a 9-member appointed board, all of whom have different experience and backgrounds in schools, school facilities, school management, finance, and others. Best grants are available to all public school districts, charter schools, institute charter schools, boards of cooperative educational services, and the Colorado School for the Deaf and the Blind. Per statute, our priorities are 1, health, safety, security, and technology, 2, overcrowding, 3, technical education programs, and 4, all other projects. I highlight health, safety, and security here because it's a very competitive program and we rarely ever get past health, safety, and security. Sometimes technology, but those are typically related to security projects as well. And then all applicants are required to provide matching money. It is on a sliding scale, which we publish annually, and we just say that that is so they can share in all the bragging that we do, and we'll get to the bragging at the very end of this presentation. Next slide. There are 3 main programs that our office funds. The first are BEST grants. We have cash funds that are typically used to fund smaller projects like roofs and boilers. And then we have lease purchase funds that are typically used for those larger new school constructions or major renovations. And those grants are financed through certificates of participation and then repaid with assistance fund revenues. We also have emergency grants that are available for any unanticipated events that might threaten the health or safety or render a significant portion of a public school facility unusable. And then this is not something that's related to revenues that the land board contributes to the assistance fund, but we also have the Charter School Capital Construction Program that's used for construction, demolition, remodeling, maintaining, financing, or purchasing or leasing of land for charter school facilities. This program is funded with a percentage of marijuana excise tax revenue and then state education fund dollars as well. Next slide. If you all see the next slide, let me know. Oh, there we go. In 2009, over 8,000 facilities were assessed by the state of Colorado, revealing just under $14 billion in capital construction needs. We began reassessments of those facilities in 2016 with a goal to complete by 2021, and then continue to reassess facilities every 5 years. Thus far, we've assessed 30% of the total school square footage in the state. But if you look a little more closely, we've actually done 77% of the districts that total less than 1 million square feet. So if you're thinking rural Colorado, we're basically working our way from the outside of the state into the center. And then we recently modeled the 22 districts in the state that are over 1 million square feet. So the majority of those along the Front Range. Capital needs so far from those that we've assessed with actual people inside the buildings, we've assessed $4.6 billion in needs. And then that modeled assessment showed another $10.3 billion. This is a really challenging number for us to share because those modeled needs are worst case scenario. And so we like to highlight that, but we were needed to attempt to get to a total of the state to have some kind of a number so that we can continue conversations. The number is constantly evolving as we get to those modeled facilities. The data is not up to date for schools that were rehabilitated or reconstructed outside of BEST. And so there are some challenges with these numbers, but that's the number that we have so far. And then just as a clarification for people, when we talk about $14.9 billion, that's in a 5-year planning window. So that's the needs through 2025 for these facilities. Next slide. The next slide will be some types of projects that we fund within the program. You can see by looking at this, the orange piece of the pie there, roofs are the majority of the work that this program has actually done over the years. Next is new schools, then security, renovation, HVAC repairs, and keep going around the horn. And there are all sorts of number of projects out there that are very important, but of course we can't get to them all. Next slide, please, Kristen. Revenues coming into the Capital Construction Assistance Fund through fiscal year 20, $1.2 billion in revenue. 65.5% of that has come from state land proceeds. And then you can see marijuana excise tax, a little bit from Colorado Lottery, and then the interest earned in the assistance fund. And these revenues plus local matching dollars plus financing through those COPs has generated $2.5 billion in projects in 10, 11 years. Next slide.
We don't want to dwell on this for a moment.
It is a nice one. There's a couple more. Some look at trends. Revenue from the land board peaked at $92 million in fiscal year 15. I believe the average right now is about $66 million, so it's a wonderful contribution. Since fiscal year 14, on the pie on the right, you can see that marijuana excise tax has accounted for 35% of the revenue, so it's a continual growing source. In fiscal year 20, last fiscal year, was the first year that excise tax surpassed the land board in revenue to the grant program. Although we'll talk about this in a little bit. The School Finance Act, what is it? You refer to it by the number, Bill, House Bill 2014-18, will actually take about half of that revenue from marijuana excise tax away from this grant program next fiscal year. So we'll probably be relying heavily again on the state land board. And then lottery dropped off quite significantly last year from a high of, I think, 14 million last year to just under $1 million this year, which is to be expected given the economic crisis. Next slide. More about trends. Fiscal year 20, which is 2 grant rounds ago, we had 58 applications requesting a total of $825 million in construction projects. Down at the bottom, you can see that the total project, the dollar amount that we were able to award, including match, was $401 million. We'd like to say that over the 10 years of the program, we've been able to award about half of the projects by dollar amount that have been requested of the program. Next slide. This last grant round, I think you maybe missed one slide, Kristen. There we go. This most recent grant round or round of awards was a bit different. We had 70 applications for $1.1 billion in total project requests. I like to look at that number as well and compare it to the assessments that we were talking about before. It's a much more real-time number of existing needs in schools that rely on the BEST grant program, so $1.1 billion. But after budget cuts last year, the total project award was $234 million. It's going to change a little bit as some of our projects work themselves out over the next few months. So less than a quarter as opposed to half. Next slide. This next slide is about the future of the program. And Bill and I talk about the impacts of potential legislation on our programs quite often. And he asked that I address them today, especially House Bill 2014-18. But as I was looking through the last 2 years and considering how to address any of these specifically, it seems just to make some more general comments about any risks that there are to the BEST grant program in general. We have a fairly healthy balance in the Capital Construction Assistance Fund, but with a very small balance required by statute. Statute only requires that there be 1 year's worth of debt service payments, which is the $55 million per year that you see there in the second bullet. When I started State Capital Construction Assistance Board passed a resolution to maintain a larger fund balance that would at least cover the obligation of all current construction projects, which typically last up to 3 years. So the board's generally okay with the notion of awarding grants in excess of the revenue coming into the program in an effort to reduce the fund balance and put that money into school construction. But that can't obviously go on indefinitely, which they understand. And as there are, myriad threats to the budgets, to state budgets, and to this fund balance as a source of money that can help fill some of those gaps in budget issues, it becomes more and more difficult to maintain that balance. In fiscal year 19, $25 million was pulled from the assistance fund to pay districts for full-day kindergarten construction needs. The School Finance Act, or 2014-18, pulled this last fiscal year another $100 million from BEST, cutting into the cash grant awards this past round, and also reappropriated all of that marijuana excise tax revenue, already over $40 million for this current fiscal year. So we were looking at, $80+ million from excise tax, and it'll be cut to 40. And then currently we're looking at a 10% cut to agency budgets across the board. And I think the state board will probably be discussing that today, if they're not discussing it right now. And BEST cash grants are looking at a $20 to $40 million cut this grant round. All of this is, just current conversation. No one knows where it's going to go, but that's the discussion as of today. So beyond this fiscal year, my understanding of our current spending authority is $85 million per year for cash grants. As I was mentioning, that could be reduced to as much as $40 million in current conversations. And then we have COP, $55 million debt service. The School Finance Act actually did increase the allowable debt service to $62.5 million, an interesting twist. If we're averaging $125 million in revenue, less that $55 million in debt service, that would leave about $70 million for cash grants without going into arrears. And then less than $62.5 million debt service, we would have another $62.5 for cash grants. With that local match, $70 million in cash grants would be about equal to $100 million annually in construction projects. It's about a 40% match typically. And this slide I created about a week ago, and I got some of this information on potential budget cuts last night. So some of these numbers don't necessarily match up to what I'm saying, but if you think about having $40 million for cash grants this next grant round plus 30%, $15 million or so, that'd be about $55 million total in cash grants, maybe a little bit more. So not the best news so far. It's a long year, but we do have some of the bragging slides to talk about. We can go to the next slide. So we've awarded 464 grants in at least 140 school districts across the state. I like to look at that map and notice how much the distribution of grant dollars has gone across the state. That's not intentional. It just happens to happen that way. So I think that's a really nice image. Next slide. As I mentioned before, we've generated $2.5 billion in capital projects and helped create nearly 30,000 jobs. I'm moving much faster than the internet. You can go to the next slide, Kristen. And we've improved the health, safety, and security for over 525 schools across the state and nearly 225,000 students. So a lot of really good work being done. And then the next couple of slides, you can just scroll through them as you want, Kristen. They're about how we market ourselves and our nascent social media campaign. We don't do a whole lot to market ourselves, so I just always appreciate what the land board can do to explain to the citizens of the state what both programs are doing to help schools. So we take a lot of photos and share them on Twitter. I noticed that sometimes we see more wildlife on school campuses than we see students. And then of course, any time that your board or our board are able to make it to ribbon cuttings or groundbreakings, that's always great for the program as well. And that's it. Thank you.
Thank you, Andy. Appreciate that. That's as thorough a review as I've received in my tenure, so it gives me a lot more perspective. the program. Any commissioners' questions or comments for Andy? Director Ryan? Yep.
Andy, congratulations on all of the great work you've done. And as you and I have talked, you know that our board loves to visit best schools when we're out visiting around the state. And it's a huge source of pride for our staff to see sort of the tangible results of our work in the communities. Having said that, and in fact, we like your program so much that the vision statement in our strategic plan says that we want to make possible capital funding for the modernization of all Colorado schools. I mean, that's a lofty goal, but I think it's something that we really rally around when we come to work every day here. Having said all that, you know, as you look forward, your marijuana money is going to be cut by at least half, I think you said from 80 to 40. And we're going to be down from 80 to 55 this year or something, that order of magnitude. Our contributions to BEST will be down 25 million. We hope only that much. As you look to the future, what can we do differently to keep you building and meeting the needs, which aren't shrinking in any way? They're probably getting worse. And so is your board working on solutions and things you'd like to see happen legislatively in order for you to enable or to continue to put up schools and make repairs at the pace you have been in the last few years?
My office works a little differently than yours in that we're not, you know, proactive in seeking legislation. Of course, our board members can do what they want as private citizens. They did create an advisory committee on the future funding of BEST last year and started some initial conversations with legislators and others to start talking about creative solutions for the program. I think any way that your board and the BEST board, or Bill, you and I can continue to communicate about the effects, negative effects on either of our programs is probably the best that we can do right now. And, you know, I'm unfortunately sort of, I think, as a lot of other state agencies are, just in a waiting game to see what happens over the next handful of months or a couple of years.
Andy, just a more procedural question. I mean, I understand you prioritize based on health safety issues, but if a school does not receive a grant in a given year, do they have to reapply the following year, or do you just sit on a huge waiting list that you've prioritized? How does that work?
They reapply, and they're not prioritized in any manner from the previous year.
Okay. Yeah.
And I should figure this out. I don't know how many years it might take the typical applicant to actually get awarded, but I've seen schools take sometimes 6 years actually to get their award.
Yeah.
That might be the most egregious, but.
And then is BEST based, is this based on programs that exist in other states? I mean, I'm always like, how are other states facing this crisis? Are they just, you know, raising taxes or mills in the school districts and passing that on to the citizens, or are there other successful models of states addressing this issue?
It runs the gamut. I'm a member of the National Council on School Facilities, and with maybe 30 member states, and there aren't 30 different ways that it's handled, but it's handled, you know, all sorts of different ways. I would say that Colorado is a little unique in that it has the land board and it has that endowment that is still in place and very healthy. So that's a unique thing for Colorado. And then, of course, marijuana being legalized so early in Colorado and providing that extra income to the program is unique for some states. And they states that haven't yet legalized marijuana or did recently do model some of their efforts after what Colorado has done in that arena. And then you have other states like, up until recently, the state of Wyoming is a proper capital construction office in that that office manages all of the construction projects for the state, and it's all funded through oil and gas revenue. So they were an extremely healthy program. I don't know if that has changed recently or not. And then of course, Colorado being a local rural state, we don't get involved in all of the specifics of those construction projects. So it's totally different depending on where you go.
Yeah. Thanks.
Mm-hmm.
Kristen?
From a PR standpoint, I know Andy talked about how his agency is a little bit less proactive with the PR, and we are sort of in a middle ground. We're not super aggressive with our marketing and PR campaigns about this, but our efforts have really increased in the last few years. It's absolutely a much sexier and sometimes scandalous headline to say marijuana is funding schools. And so we don't necessarily, I make no effort to associate the land board with those stories, which are more frequent, but anytime we can attend groundbreakings and help with the PR for best grants in rural communities, we really have amped up our efforts to do that, particularly because of the ratio of rural schools getting best grants and the likelihood that in almost every case, the students who go to that school have some fraction of parents or teachers or neighbors who are our lessees. And so it really comes full circle. It might not be the actual dollar to dollar, but the folks in the communities who are leasing our assets and paying us rent ultimately then are benefiting from the best construction. And it's just a really good feel-good story. And it's only ever positively received.
Thanks.
And thank you all for all of that effort. That truly helps.
Any other questions or comments before we take a quick break?
Andy, thank you for making the time.
Yeah, Andy, thank you so much. Thanks for putting on the tie. Appreciate it. The extra special effort there. Let's take a 5-minute break, reconvene 9:45, and we'll dive into Chico again. Thank you all.
Nick, you there?
Yep, I am.
How's your, how are those slides coming through to you when Andy was moving them?
Kristen was moving them, and they were.
Right.
All right, I'll record from my side. Go ahead.
Okay.
Go ahead.
All right. Thank you. Like to reconvene a meeting of the Colorado State Board of Land Commissioners. Today is Wednesday, September 9th, 2020. We are currently in a workshop session, and our next item is a continued discussion around the Chico Basin Ranch lease renewal process. We have all 5 commissioners present, and with that, I will ask Assistant Director Okish, tab 5, to lead us through our conversation today.
Great, thanks, Commissioner. For the record, Greg Okish, Assistant Director. Do I have a slide up on your screens?
Yes.
Okay. So this is today is a 2-part conversation. The first part is focused on establishing and confirming, if you will, the priority or importance of certain goals for the exercise of leasing the Chico Basin Ranch, and then part 2, and then we'll take a break. I think we may take a short break in between, or at least I'll need a little time to switch slide decks. And part two will focus more on staff providing you with some feedback on some of the discussion that happened at last month's meeting. Do we have some guests who may ask to participate? But those are Duke, the lessees from Boxy Partners, Duke Phillips, B4, and
Hey, Greg, you might want to,
especially during,
Greg,
yeah.
You're sort of choppy.
Yep.
Maybe turn your video off. I don't know if that will help.
Yeah, I will do that. I may have to figure out how to do that. Give me just a second.
And thank you for wearing a tie.
Oh, you're welcome.
Sorry to interrupt you, but you were,
no.
There you go.
Thank you. Let's see. You don't have slides up, do you?
No. Oh, does that inhibit your ability to share your screen?
Only intellectually. No, it does not. Only on the, given the fact that it threw me for a minute. Hang on, I think I can figure this out. Okay. Are there slides up now?
No.
Okay, hang on.
Greg, my offer stands if you want to tag team.
No, I want to do it myself.
Yeah, the ego won't allow that.
How's this?
You're getting there. There we go.
Okay.
You got it.
So we have guests. The team on this, especially part one, has been the last few months, is Kristen and Justin. And I want to say Kristen really did the heavy lift on compiling the results, the surveys that the commissioners took. And I may ask her to jump in at least a couple of times to sort of share her thoughts on what the results may represent. And then finally, I ran through this with Kristen a couple times yesterday, and I will suggest that I really need, commissioners, your help with this. This needs to be participatory or it's going to be deadly. If I just spend the next 30 minutes talking to you about what we think we saw, I don't think I'm going to keep you engaged very long. So I have at least several places along the way where I would like you to engage, and please feel free to engage anywhere along the way here. So again, this came out of a conversation last month, and I think you astutely sort of pointed out that we may not have spent enough time establishing clearly what the goals are for this leasing exercise and essentially what matters most. It doesn't mean that the things that we prioritize maybe towards the bottom of the list don't matter. It simply means that we do need to understand what's most important, what are the most important outcomes we're trying to achieve. And that has to come, I believe, from you, the commissioners. And so that's what today's session is about. As you now, I'm sure, are all starting to remember, we have this decision process we're going through. We are being flexible. We did last month, you all made the decision and sort of endorsed the idea that we will continue to hold the ranch in the portfolio until at least 2034 through another cycle of a lease. And then suggested that we pause. So there's not a block of color up here that describes today's meeting per se, but before we get into the next month, what rights are being leased, you suggested and requested that we revisit the goals. And so that's what we're doing today. Again, the Chico Basin Ranch is located in south central Colorado. It's a large ranch. It spans 2 counties, El Paso and Pueblo counties. And I want to remind everybody that it does not exist in isolation. It's a part of a 250,000 acre block of state trust land that's managed under 10 separate leases. And the Chico Basin Ranch is one of the purple colors towards the very, if you're seeing my cursor, towards the south part of this complex. It sort of creates a U-shape around the federal test track. So it's the largest block in this block of state trust land. And again, staff certainly agrees that clear goals will provide a foundation for decision making. So I think today's time is well spent. And I want to spend a little bit of time on the methodology, both to remind you of the steps we've been through, but maybe more importantly to be clear on the public record what we did and how we did it. So we created a digital survey and distributed that digital survey to each of the commissioners. That survey in a hard copy format was also included in the board packages, an attachment to the cover sheet. The survey was completed individually by each commissioner. There wasn't any crosstalk or comparison. You each did it on your own. And then with the results were bounced back to staff, and then Kristen, as I mentioned, compiled those results so that we could sort through them and try to reach some, well, put them in a format that we can give back to you today. They're being presented today at a public meeting for discussion. And then we have taken a stab at staff's takeaways, if you will, from what we think we heard. And I have a slide about that at the end, but it's quite likely that may change through the course of this discussion. Certainly possible we interpreted the results one way and you'd like to correct us and tell us either individually or collectively you may have meant something else. But at the end of today's discussion, we will try to recap what it was we heard and what the general direction is that we're taking away. Does that all make sense?
Yep.
So first of all, we started, and this was covered, I think, pretty well in the cover sheet that you had in your package. We started with a set of goals that we discussed with the board in May. And those goals were the result of a specific process we went through with Box T Partners, staff and Box T Partners, several meetings over a period of a couple of months, trying to determine if we actually had, how much common ground we had in what we would try to accomplish through a new lease. And these were the headings. There were about 7 of them. And the conclusion that we shared with the board in May was that, yes, in fact, there was a fair amount of common ground. There were some areas where maybe our goals diverged more than others, but it certainly appeared that we shared a number of goals. For purposes, and that was useful for the discussion leading up to May, each of these, let me go back for a minute. Each of these goals had a number of, I'll call them sub-goals underneath them. So while the major heading might have been agriculture operations, then the land board and Box T Partners also listed the individual things we wanted to accomplish underneath the heading of ag operations. For purposes of making progress today, we're going to revisit that. We did revisit this topic, these headings, a little bit in the survey. And then what we did, I think staff thinks it's really important that going forward, we frame this conversation from the land board's perspective in terms of our strategic plan. What is it we're setting out to do strategically this year and in future years? And so what we did is a little bit of reorganization, and we organized the sub-goals from the May conversation under the headings in our strategic plan so that the commissioners, as you were asked to prioritize them, could think about them in terms of our strategic plan. I think that was clear, pretty clear from the memo that was written. It's a little, I think, harder to describe here. I think it'll be clear when you start to see the results of the survey. But before I go further, was that clear to the commissioners what we were trying to accomplish when you were taking this survey and as you read the memo?
Head nods, yep.
Okay, thank you.
Affirmative head nods.
Affirmative head nods, thank you. So I'm going to start to share with you the survey results. In each sort of section of the survey, I will share the literal, the measured results. I'll tell you a little bit about staff thoughts, and then I will try to engage you to maybe give us some feedback on parts of what you shared with us. So I also want to point out at the top of the slide here, every one of the slides where it says range equals on this one 5 to 35, for the benefit of, in particular, the public, but for the commissioners as well, we asked you to rank things. And so there were 5 of you taking the survey, and your highest ranking would be a 1. 1 was most important. And in this case, there were 7 items to rank. So if all 5 commissioners ranked the lowest one consistently, your lowest ranking would be a 35. So the range was 5 to 35, with 5 being your highest priority. And on the Chico Basin Ranch goals, the ones I just showed you a minute ago, these were the results in terms of highest and lowest. So there was a pretty consistent cluster of ag operations and real stewardship being the highest, and hospitality, in this case, being the lowest priority. And I think you'll see consistently throughout this that topics around ag operations and real property stewardship tend to come to the top pretty consistently. I don't want to tip you off, but I do think hospitality and recreation tended to sort of fall to the bottom consistently. So as Kristen and I talked about it, our suggestion would be, unless you feel differently, when there seems to be consensus, we're not asking you necessarily to spend a lot of time talking about your highest priorities or your lowest. But when we look at the grouping in the middle, if you will, where there was more, each of you individually might have had a different point of view about, in this case, the 4 items in the middle, K through 12 education, the importance of public access or fundraising or K through 12 education, or say career development as a priority. It might be useful if you shared some of your thoughts around those items, and I'm going to give you an opportunity in just a minute. And I will have this slide back up when I do. Before I do that, we also gave you an opportunity in the survey to share your thoughts in a written format. So it was please prioritize these items and then share any thoughts you had in terms of why you did what you did. And so we pulled, Kristen, correct me if I'm wrong, I believe what you tried to collect were places where there was either in these comments great consistency or maybe outliers. Is that correct?
Exactly.
Okay. So I'm going to go through these. I'm not going to read them. I will give you a few seconds to read each one. These were the comments that you wrote in the comments, commissioners wrote in the comments section of the survey. So this is one of the places I hoped you all might engage. First, if you would like to own one of these comments and say, well, that was something I said and what I meant, or if I could elaborate. Or secondly, if you read these and are curious to know that it's not your comment, but would like to know what another commissioner meant or was trying to emphasize, this would be an opportunity to ask that. So this is the part where you either help me and engage, or it's going to start to get deadly.
This is Commissioner Shaw, and I own the bottom comment where revenue generation was followed by stewardship. And all the way through this, I really focused on what had the biggest impact. And it was the ranching and the stewardship.
Yeah, I might add, I mean, in my mind, I thought about what is our core competency, and sort of that charge and mission. And so, you know, fairly consistently, I think when I had the opportunity, I prioritized it as an operating ranch.
Thanks. Any other commissioners?
Yeah, this is Commissioner Scanlon. Greg, it seems like we all were in some agreement around how to, you know, the ag and stewardship questions. So I'm actually, I'm not surprised. We've been talking about this a long time, but it was also good to have affirmed.
Commissioner Heath, just following that, mine was uniquely positioned to be simultaneously goals 1 and 2. What that really meant was I had a hard time deciding which one was 1 and 2. So I agree with most of you.
Okay. I can, so I think as we started to talk, I do think there seems to be consensus. And as we get to the end and try to summarize, but I think Kristen's takeaway was the priorities were on agricultural operations, and we'll get inside of that and talk about what the priorities inside of that were, and stewardship. Any thoughts? Is there anything you want to share about that middle piece? I think later we get a little bit of clarity on some of these middle items, the middle 4, but I think it's one we may need to spend more time talking about a few slides from now.
Yeah, I guess my attitude towards those sort of latter 5 really is like, I guess, make sure we're doing the fundamentals. You know, I mean, just the priority is ensuring we have outstanding operators and lessees focused on, you know, the health of the land, on ag, ranching operations. The other things would then come around, you know, or perhaps be informed by opportunity or expertise, what have you.
Okay.
And Gary,
yeah.
Commissioner Butterworth, to then further clarify, what this data is showing is that of those remaining 5 items, hospitality is the least important to you all. So maybe if you can affirm that that's what you feel.
Yeah, that personally, I think I ranked it low. To me, that's a nice to have, and or, hey, if the operator is doing everything else well and sees an opportunity and can manage it in the scope of everything else, you know, I'm not averse to the ranch being used in that manner, but it doesn't rise to the level of critically important in my mind.
I'm right along. This is Commissioner Carney. I'm right along with those with Gary's comment.
Yeah, I am too. And with regard to public access, I sort of assumed that was something of a given. You know, there were further questions later that we can talk about, but this is obviously part of that program and assumed it would be in some form going forward.
Can you, Commissioner Scanlon, can you add to that when you said it's part of that program? Which program were you referring to?
The public access program with CPW, and I think there's, I don't see it, you know, as a whole coming out of that portfolio.
Well, I apologize. I should clarify. It is not currently in the public access program with CPW.
I thought it was.
So that, no. But that is, I'm glad you brought it up because I do think it's something.
Well, it's good you clarified because I was confused by that. Is it been discussed about potentially being part of it?
They've expressed an interest, but we haven't done anything with it because the recreation use is currently under the lease with Box T Partners.
Okay, I got you. No, I apologize. I was confused by that.
Public access, I took that as around like the birding community. Is that more what that addresses? Or and schools, I guess, coming on for field trips.
Right.
Well, you're identifying something that Kristen and I realized yesterday, that this is the way that this topic got bundled up when we were talking to Box T Partners. And as I don't want to put words in their mouth, but I think as they said, the whole K through 12 piece and the open gate policy and their ability to fundraise, to fund education, we're all sort of interlinked.
Yeah.
I think we may need to unbundle that as we go forward to figure out what is important to us. And it made it difficult for you all, I think, to know what you were responding to in this survey. I think that's important to acknowledge.
Yeah.
This is
Commissioner Shaw. Yeah, I think you were weighing in.
And I viewed that public access as the program that is currently underway. And I viewed that as being dictated by the state as opposed to something that we would voluntarily do.
You mean like the CPW public access program?
Correct.
Yeah, okay.
So I was misaligned on that as well.
Okay. Well, we will have time to spend some more time on that. It's good to know. I appreciate you all letting us know that may have been misunderstood.
This is Commissioner Heath. I think one of the reasons hospitality is so low that for some of us, we did not see it as a potential revenue generator. And, you know, maybe when they showed us those little accommodations where people could stay who would do photography or just want to experience your ranch or something, I think you have to see a business plan that demonstrated that it was adding to the value of the revenue generation before, you know, we would put it any higher.
Okay. Should I go on?
Sure.
Okay. So now what we're going to do is under our strategic goal headings, the first one being financial trusteeship, we've organized, I think in this case, the 4 bullet sub-goals that we thought best fit here. That was, we needed, one goal was to identify the most financially capable and operators, somebody who had the financial depth and resources to run the ranch well. One sub-goal was that the agricultural or the rent in general was commensurate with the other state land board large ranches. Another was that the land board was compensated for recreation and hospitality uses on the ranch. And the 4th one was that we work to deliberately increase the economic value of the ranch over time. And to be clear, what I mean is if it's worth $35 million today, we're making investments and pursuing programs that 10 years from now ensure it's worth $45 million. It's growth of the value of the ranch. So those were the 4 subcategories. Actually, I might have broken into 5. So again, there are 5 questions here that you were asked to respond to. So the range here is 5 to 25. 5 is your highest priority. And as we were just talking, I think there's some real consistency here in what we just talked about. 5 being a unanimous vote, if you will. The top priority came out as ensure that the ranch is leased to a qualified and financially capable operator or operators. And the lowest one, again, almost unanimously, was ensure that the school trust receives reasonable compensation in return for allowing hospitality uses on the ranch. I think it's pretty consistent with what you just saw. And then the 3 in the middle, if you will, and the top one, the one with 9, this is where I should let Kristen speak because she's better at interpreting these than I am, but I was going to say the 9 I thought was a pretty consistent indication that achieving grazing rent that's commensurate with properties that are exposed to competitive bidding was probably meaningful feedback. And then the 2 others were increasing economic value and compensation for rec uses, which seemed to be more significantly towards the bottom. Again, I'll show you your comments and then we can talk about these. So once you're done reading those, I ask for a volunteer to maybe talk about if this is one of your comments and just elaborate if you can.
Can you go back a slide?
Oops. Is this?
No, one more. There you go. Like to me, those top 2 are far and I mean, if you look at the achieve annual grazing rent, that's an average of a 2, I think, a 2 score. So I would put those top 2 and then the bottom 3 sort of as also rans. But you know, this is a marquee asset property, and just as we've done with all our other large ranches and perhaps all of our leases, I mean, we've got to have qualified, financial, capable operators. I think that's paramount. And then certainly, I'm not sure why we would seek anything other than a market rate grazing rent, unless through this process we determine that we're asking a lessee to go above and beyond or do something on our behalf that would have financial value to reduce perhaps that rate.
Okay.
And then I guess increasing the economic value of the ranch, we're holding it. I think if we are taking care of the ranch through selection and management, I think I just made an assumption that we would be increasing the economic value of the ranch.
Okay.
Other commissioners?
Yeah, this is Commissioner Scanlon. I made the same assumption on increasing the value, and I am open to a conversation on the competitive bidding for the grazing rent. I think, Gary, you're exactly right. Do we value other things? And I think that's the point of this whole exercise, in a way that should reflect in that value. So I'm open to that, but I agree with the priority.
Any of the other commissioners? Commissioner Carney or Heath or Shaw? And if not, I will go on.
Okay, we're good, Greg.
Okay. So stewardship, we had a number of goals, sub-goals under stewardship. Ensuring the stewardship of, and these are abbreviations, the longer versions will be up in a minute, stewardship of working lands, long-term health and productivity of natural values, ensuring that the lands in the stewardship trust are well cared for, increasing resiliency in the face of climate change, partnering with our lessees on developing and implementing preferred land stewardship practices. We put public access here. You could talk about putting it other places, but this was the notion of public access. Particularly, I'll refer to, you mentioned it, perhaps the bird banding station, or under the current management policies, the open gate policy. Is there a benefit to public use? And does public use in any way compromise stewardship? I'm not sure it does, but that's why we put it here. Protecting the water rights on the ranch was one of our goals, and supporting future generations of ag operators and / lessees. So on this one, given the number of questions, the range is 5 to 40. 5 is your highest priority, 40 is your lowest priority. And again, I think we ended up with a pretty clear, well, a very clear first priority and a pretty clear lowest priority. Protecting and enhancing the long-term productivity and sound stewardship of this working ranch was a unanimous first priority. Ensuring the public access is carefully managed was the lowest priority. And in a minute, I want to spend some more time on that to either understand your thoughts, or to maybe determine whether or not the question wasn't bundled too many questions altogether. And so you may have been answering each individually a different question. The middle, again, was pretty clearly concentrated. Kristen, will you share your thought on this, please?
Thanks, Kristen Kemp, for the record. Yes, so as Greg said, you have absolute unanimous alignment on the first sub-goal, which is great, and then fairly unanimous on the final one, but that's a little bit complicated. But this middle section creates some vagueness for us as the data collectors, because your rankings weren't necessarily consistent. And so it would be great to have a discussion with you all to hear if you felt very strongly or not about a particular ranking. And I'll say that how we interpreted your qualitative comments was that you did not feel strongly. I think nearly all of you commented that many of these felt similarly important. And so because, as I interpret it, but I want you to correct me, because you had you wanted to give them similar weight, you each ended up ranking them slightly differently. But I think what I'm hearing is that you're okay with how it shook out, that you didn't necessarily feel super strongly that one needed to be third and one needed to be fourth.
So to Kristen's point, thank you, Kristen. Let me show you the comments, and then I'll put this slide back up again and we can talk about it. Oops, here we go. So why don't you guys share, commissioners, please share your thoughts, and then we'll talk about this bottom one last, maybe.
Commissioner Shaw, you're off mute. you wanted to chime in?
I was reasonably ambivalent about the middle section of 4 or 5. And I didn't find one of them that struck a nerve particularly.
This is Commissioner Carney, and I would agree with that. I mean, it's clear on the first one, but then the other ones below seem to be pretty similar.
I think in my mind, sort of the order of magnitude, starting at the top, protecting and enhancing long-term productivity and sound stewardship of the working ranch. For me, then, I think, I thought in order to do that, we have to ensure, water rights are going to be critically important. Now, I have no idea if our water right, are they threatened? If they're part of the ranch and don't need a whole lot of attention, I'd be hard pressed to understand how we would ever relinquish water rights associated with the ranch, but it seems water is critical for the long-term productivity and sound stewardship, as well as sort of just seeing the climate change and that impact. I felt like those three were sort of one and the same. Not one and the same, but closely correlated or tied together. And then you've got a whole section around the natural values of the ranch that I think I probably would like to see some sort of like a master plan. I mean, we're going to see the Fen stewardship plan, like this shortgrass prairie. Like I know enough about some of the natural values of what exists, and it seems to me perhaps we need to call out a particular management plan associated with that would fall under this lease in some fashion. But that sort of how, and then like support future generations of ag lessees. I appreciate that. That just didn't raise to a level of priority if we're trying to determine the most critical components here. That didn't weigh heavily with me. Not that it's not that I don't see value in it. It, again, when you're pushed to rank order and create a level of importance, that one seemed down low for me.
That's helpful, and I should recognize, I think I'm sure in a perfect survey world, some of these questions are very redundant, and it was the result of not wanting to have staff edit any of what was in the May material on your behalf. But clearly, I appreciate what you're saying. There's some real overlap in the questions. And just to touch on the water piece, there is a risk of losing some of our water on the ranch if it's not managed appropriately by the state land board and the lessee, in case that changes your thoughts. But it's something that just needs to be managed. But we wanted to make sure it was on here so it wasn't forgotten.
So, Gary, this is Commissioner Heath.
Yep.
And I did not interpret public access as PAP. I was thinking more about what it must mean to operate a ranch and just have sure that all those agreements are worked out, whether it's bird banding or somebody access. But I did not think that was PAP, and I don't know if, what the status of that is in terms of whether it's pending or whether that's even in their future.
The Commissioner Heath, this is Greg Okish. Let me frame it this way. I thought Justin had an interesting reaction to the low priority on this one yesterday. And so to his embarrassment, I'll quote him. He said, well, they don't mean that they just want the public running around out there willy-nilly, do they? I said, I don't know, I'll ask. I think what staff was trying to understand is Bach's Tea Partners to speak on behalf, to share a thought. I think they've said that allowing the public on the ranch through an open gate policy where people sort of self-check in is important to them in terms of community relationships, a little bit of revenue, and communicating broadly what ranching in the West is all about. Staff's probably shared, not probably, staff has shared with them that our concern is the current situation, if we're going to talk about the current situation, may be reinforcing people's point of view that state trust land is open to the public and that this is becoming in some ways, well, a public, in people's minds, a public park that is associated with Colorado Springs or Pueblo. They can go mountain biking or hiking. It's certainly, as you saw in the public comment, become known as a birding destination, although we have, the land board has no agreement with anybody that it can or should be used that way, although I'm not opposed to it. We just haven't done anything to put agreements in place to allow it. So I don't know that we need to resolve it today, but I think next month when we talk about what rights are being leased and how we feel about public use of the property, this will become something that we have to spend more time on. So if there are things you want to clarify today about what you were thinking, it wouldn't hurt.
You know, for me, I guess through this, I took everything starts with viable operators, sound stewardship, operating ranch. And then from there, I guess it's what are compatible uses, what are the skill sets and or interests of the lessees. But I would hate to impose, activities that would compromise the competency and skill set of the ranching lessees. And so, anything in my mind, anything that would, and I understand, I'm not saying that we would perhaps if we're taking this to an RFP, we can paint an ideal that we understand the values of this ranch go beyond simply a working ranch, but that the birding and the natural values, we would certainly like to see potential operators' ideas on how they could integrate that, or are those aligned with how they could manage the ranch or something like that. But at the end of the day, and I'm not saying that I can't, my mind's closed, but what guided me was this is a working ranch or ranches, first and foremost, stewardship and operation.
Okay.
I think that summarizes my feelings pretty strongly as well. Thanks, Gary.
Commissioner Heath, you're muted.
I will say that clearly in terms of advocates, the birder community really articulated the importance of this and the unique part of the location. While the natural values are also really important, I put those up pretty high. And so I would hope that whatever we do in the RFP, while it includes the ranching, really recognizes the unique plants and the unique, apparently, bird migration corridor that's there, and that we can preserve that.
Okay.
Okay, so Commissioner Heath, that is helpful to hear because that gives us a little bit more understanding of the differentiation within these middle items.
Yes, and I do think for many of us, items 3 through 7 were so close that we sort of picked this as last and then struggled to figure out the others. So I don't
reverse engineers, yeah.
the importance of this.
Yes, agreed. That's how we interpreted it as well, which in general just shows your overall alignment with each other, and that's helpful and great and healthy.
Okay, I'll go on to the next one, I think. So under our strategic plan heading of organizational excellence, and then looking at all the sub-goals we've listed, there was really only one that I think logically fell under this heading, but it was a really important one, and it's this notion of fair, reasonable, and transparent leasing practices. In fact, I think that language might even be partially from the strategic plan. So there was only one to score or evaluate. What we're showing you here is that 4 of you identified it as extremely important, 1 as somewhat important, but nobody felt it was not important or not at all important. And again, I'll share some comments, then we can talk about it. So I would invite, not sure if there's a lot of discussion on this one, but I'd invite any comments that you might like to make.
This is Commissioner Shaw, and the 4th comment was one that I made.
This is Commissioner Scanlon. I think my only question, I wrote the first comment because I think we're constantly in a tension with stewardship versus revenues. And so it's just acknowledging that. And from that perspective, I think it's hard for me to define fair necessarily because it's about how we value things. And or reasonable. You know, those are subjective words to some degree. Transparent, obviously. So that was my only concern with this.
Okay, thanks. That's helpful. Any other discussion on this one? It's okay.
I guess I would just add that it's my sense there is a lot of interest in this. I mean, I think it stands to reason with any of our practices, even if we were to go to a you know, just a straight negotiation without bidding. I mean, just providing the rationale that it's well supported. Not that everyone's going to agree with it, but in this particular case, I think, you know, it's my sense there's a lot of interest in this asset. And, you know, to me, when we think about understanding the asset to the best of our potential to understand how to best position it for the future, I think I need to understand what the other interest is, and to provide others an opportunity to express their interest in this asset as well.
Okay. And I think that part 2 of today's conversation, we might elaborate on that a little bit and have some more dialogue around it.
Okay.
Thank you. So the last one, communication and outreach, and because this is Kristen's category, it's extremely long. She's an overachiever. But a lot of our goals fell under this heading. So again, public use by leasing or invitation. I mean, it was sort of the notion of messaging that. What is public? What is state trust land, and how is it different than public lands? What is our mission? How do we share information regarding the innovative ranching practices that we are, that our lessees may be using. How do we similarly share information that they may be developing about how to build a successful ranching business in difficult times, during times of low moisture or climate change. This was a discussion about on the current ranch, there are significant and successful adult learning opportunities, and how should we participate? Should we participate in communicating that? Opportunities about state trust lands being available for teacher-led K through 12 student education, developing collaborative relationships with elected officials at various levels. So this one, we had 11 sort of sub goals on this one. And again, the range starts at 5 and this one goes to 55. Wasn't quite as maybe clear. The top 2, which had to do with sharing information related to regenerative agriculture, soil health, innovative ranching practices, and perhaps working with a lessee to share that information with other lessees and develop resilient business operations, were the top 2. The lowest, again, was around hospitality. And then there was a range, I'll call in the middle, from about 20 to 40. I'll put this slide back up in a minute. I'll show you some of the comments.
So I'll weigh in here. I said that the phrase using this ranch as an example or a model did not seem appropriate. The rest of that sentence was as to demonstrate the financial advantage or something to schools. And the reason I was probably outside the realm of where you all were was how I interpreted that, in that I think we've chosen to look at stewardship and proper management of the ranch above just the financial goal. And therefore, I guess in reading the whole sentence, felt like the ranch maybe wouldn't be a model in terms of the most lucrative, but it would certainly be a model of something that generates enough income to be responsible. And I guess, so that's a little bit of clarification on what I was thinking.
Yeah, that's helpful. It's this third, I believe it's this third sentence.
Correct. And this is Kristen Kim. Commissioner Heath, that's very helpful, because that particular item was the outlier that sort of changed the effect of the entire question. Because, and since it's all public record, I might just go ahead and state that in that particular item, you ranked it least important, which you've now just explained.
Right.
But by ranking it 11th out of 1, it had a ripple effect through the rest of it. So these comments you've made just now really help me better interpret this.
Right, and I think it's a wonderful example, and the example that we can showcase. But if we're only showcasing it as an example of being lucrative in terms of financial benefits to the schools, that's where I got stuck. So just factor that in.
This is Commissioner Shaw. My reaction to it was a concern that we're asking our lessee to do too many non-financially productive activities, and that ultimately it will tend to degenerate the ability to be more profitable.
This is Commissioner Scanlon. So I was doing this on my phone, which was sort of an interesting endeavor, unfortunately. But so I had to kind of think about them generally and lump them together. So the end of my comment was that I do think it's something that we want to communicate about. Use this to communicate the land board's work, which I think is really important, and it's a great asset for us from that sense. I like the model for ag, soil health, some of those as a second kind of grouping. And then third was educate and support the public access. And then fourth, I put maintain positive local and state relationships. Candidly, I could reverse those. You know, they were just, I think, Kristen, you were capturing this. They were just of a lesser importance, but nonetheless, something we could capitalize on.
And Christine, if I could just add on mine, taken out of context, it says, I don't think we should use this ranch as an example. I definitely did not mean that. The rest of my statement said, if we're only thinking about it as financial, the financial return to the school trust.
I totally follow you. I totally follow that. Yeah, I think it's a model for a lot of reasons, not necessarily that.
I think I sort of looked at this and lumped things in what I envisioned was critical to the mission before us and how we can increase the value of all of our assets. So those top two, to me, anything that we can learn and do and share amongst those who manage our lands and work our lands is going to benefit the organization, agency, the trust, the biggest portion of our assets. Then, in terms of like communication and outreach, and having been on the board, I'm firmly aware that one of our charges, or what we've desired, and Kristen's done a fantastic job, is, it's a little frustrating, all this work, and we're all over the state effectively, and people don't know us or don't know the land board brand, but to me, we want to continue to do that. But I then went and looked at, local elected officials and state legislators, publicly elected officials can impact policy, and or, state legislators can impact what happens to, how our funds are distributed and dispersed. And I don't think many have a good understanding of what we do, which is why I feel like we're always on the defensive. And when people just think, oh, well, we'll use the land board, we'll hunt, it's public land, we'll just take their revenues. So in my mind, it was sort of what we can do not only to enhance the asset itself, but share stewardship practices, ensure that those who have the ability to influence from a policy standpoint, and then the broader public understanding, who we are and what we do. That was my mind frame.
And I totally agree with you, Gary. And it seems to me that these aren't necessarily, these are complementary strategies, I guess, is my perspective, not competing. Mm-hmm. So that's why I think I struggled with the prioritization, because you get multiple benefits from, in terms of communication, outreach, engagement of people who we want to have better understand our work and value of it. So I think I mushed them a little bit. For that reason, I didn't think like we are saying one's necessarily greater than the other. It's just that we can benefit both from both or more. by using this.
Yeah.
This is Commissioner Shaw again. And I think it's just an opportunity to say here are 7 or 8 opportunities that all contribute to a more robust program. So I'm with you on that, Christine. Just that you need to not so much focus on the prioritization, but as the concepts that need to be melded together.
Thank you. That makes a lot of sense.
Okay. Any other comments on this item? I think we can charge ahead, Greg.
Okay, so I took a stab, and there's really 2 questions here at the end. This is the last slide. One is, how would you like to use this? How would you like staff to use this information, keep it in front of you, make sure we're sort of reminding ourselves of what you all discussed today? I took a stab at a summary, and I chose the words a greater emphasis. You know, as we go forward, what I think I heard was there's a greater emphasis on one list of things and maybe a lesser emphasis on another list. The greater emphasis, I think, was on achieving a competitive financial return from ag operations, selecting a qualified and financially capable operator, ensuring long-term health and productivity. And these aren't in order. I could have flipped them around. This is the order we sort of went through them on the slides on. Establishing and sharing sound stewardship practices, demonstrating fair, reasonable, and transparent leasing practices, and communicating the agency's purpose and mission. Slightly high level, those were the places that I saw the greatest emphasis. Less on perhaps supporting career development in future generations of ag lessees, increasing total, deliberately working to increase. I heard you say it would happen of its own volition if we do the other things right. Generating income from recreation and hospitality is in particular, if it gets in the way of running a successful ranch, has a lesser emphasis. And I thought I read this, we didn't spend a lot of time on this, but I thought I saw some comments that led me to believe that the direct economic support of on-site K-12 programming was a lesser emphasis. So again, your reaction to this, your thoughts, I can edit it and give it back to you, and then we'll use this information.
Commissioner Carney, you're off mute. Did you want to make comment?
My comment would just be that I think I think that lines up kind of with my thoughts, is how you have the emphasis on there, just on the economic support for the K through 12 education. I just think that on this last lease that there was some value given to the education to lower the lease rate, and I just think that we need to be competitive on that lease rate, and that as I feel K through 12 education is good, but it's hard as a state land board to monitor that and put a value on that, is how I felt. So that's where I was coming from.
Okay. Commissioner Heath. Commissioner Heath, you're off mute. Were you wanting to?
Well, Greg, I appreciate these are not ranked. I think people look at the first one whenever you have something out there and they think it's first. And I would hope that maybe we would take what is the second one and make it first, because I think we all had consensus around that. And the other is, I would hope maybe rather than establishing sound stewardship practices, that there could be something in there that recognize the natural values that are currently on the ranch and protecting those, because I think establishing sort of implies that they haven't been done.
That's a fair point. Okay, so you said a couple of things. More emphasis maybe on protecting the natural values.
Right. At least.
And
my
Okay.
thought.
And this is Commissioner Scanlon. I tended to value the career development piece higher, I think, than my fellow commissioners, only because I think the land board sits in a unique place to help foster either apprenticeship programs or some kind of pathway forward for folks coming into ag in a way that's pretty unique. And I hate to lose sight of that because I actually think it's a real concern over time. And so that was just in general with the survey, I did tend to recognize that a bit more.
And actually, I agree with that. I think we are in a unique position to model this, not only for lessees, but for just folks in the general public who want to have a place to learn more about this. And, you know, it feels to me, I was watching a YouTube thing from a farm in Vermont where they were talking about best practices. And I'm thinking, gosh, you know, do we have broader educational opportunities to really show what's happening on that ranch that could be transmitted by more than just spending 6 months at the ranch? Are there ways to really take that career development and perhaps with the new technical places that are there, schools of agriculture, other, you know, 4-H, other kinds of programs might very well benefit from that. So I too really felt like the supporting the career development and new generations really deserved emphasis. So I'm not sure how I ended up with that. Let me see. Anyway, I'm agreeing with you, Christine.
Okay.
I guess
yeah.
I might ask Christine and Josie on those comments. I mean, are you, ultimately this is going to an RFP. So are you saying that you think this rises to a level that needs to be included as part of a operator's bid, that they explicitly have some component around career development or
they get credit in some sense for it? I do, because I was thinking about you, Kristen, and your work. When I was struck when we had lunch, John, with the couple of young folks who were part of that program, how this was changing their life. And they were really going to, their stories, I think, would be great for us to capture as part of the land board's communication, because you know, these were I think one of the folks we talked to was from Chicago or a big city, and all of a sudden now they're looking at a whole different career pathway and a profession and being in Colorado. And I think that is that's impactful. It was to me.
Well, and I think following that, you know, in order for us to continue to have lessees who can really manage the properties that we entrust them with, we've got to provide some kind of continuing education, if you will. And it feels like that might even be more, you know, expensive. So I would put greater emphasis on it to answer your question, Greg.
I guess I mean, like, I think, yeah, we've met some of the apprentices down there, and very cool program. I guess I would ask maybe the question, whether we get into it today, but like, why Chico Basin? Why wouldn't we, why would, you know, like, is there a reason we would be emphasizing that on this particular property over any of our other properties or large ranch lessees?
Mm-hmm.
So
my initial reaction is no. I think maybe we should just consider it as something we do think to prioritize. You know, we saw also at Lowry. I just think it's kind of a unique opportunity for us to make a difference in promoting a profession that is struggling. So I agree with you, Gary. I don't think it's unique to Chico. I think it's something we collectively should think about and talk about more.
Yeah.
I think what this is Kristen Kemp, the survey is forcing a complex conversation about this, because as Commissioner Carney originally said, the last bullet on this page, which doesn't necessarily mean it's last, but about providing economic support for on-site K through 12 education. The economic support is in the reduced revenue we collect. So we're not necessarily giving money, but we're collecting less. And so what you've just described for supporting career development for future generations, it is the same effect, that if you decide that that's a premium and that we offer essentially a subsidy or some word for that, you are therefore making a decision to collect less revenue. And so as long as, you know, you're very aware of that. And so maybe what would be helpful is that right now, Greg has this into two categories of greater emphasis and lesser. And maybe folks would feel comfortable if there was a middle emphasis, and we put support career development in that middle one, because I think what you've all said up until this slide was, yes, having a sound operator and sound stewardship is what's most important. But then when you see it on the screen that these other things are lesser, it's harder to swallow.
Well, I think a middle group might be appropriate. I guess Chris and I would feel like if they're doing that career development and apprenticeship, I wouldn't necessarily see it on the operator for us to find a way to transmit that information. I think it might be a communications function where we really develop some learning segments that, you know, other groups could purchase, or that could be part of a continuing education program, some ag schools where they actually, you know, have what they're doing at the ranch transmitted by some really neat YouTube things that we do. But I don't think they should be the ones who have to do that. They're doing the really authentic thing, which is helping young and not so young people understand that ranching is a career that they can and could pursue.
This is Commissioner Shaw. I've got a real question about the increased total economic value being a lesser emphasis. And I'm grappling with why that would be one that we would not be emphasizing.
Yeah.
I think I heard Greg say that, and I think I had said, if we've got the right operator and we're managing and stewarding, then by doing that, I was making an assumption we'd see an increase in economic value. So I think that's what I heard Greg say, was that was sort of being taken care of by the things that we were putting a greater emphasis on.
Gary, if we really consider this is going to be an outside document for people to look at, I do think we're subject to criticism if we don't include increasing economic value. Yeah. Or maybe it's that middle portion that you suggested, Greg, or maybe even putting it up in the top section.
I can move it. Another option, and to respond or try to answer Commissioner Shaw's question, I was thinking this meant, you know, deliberately increase total economic value. So invest in, I thought the outcome was actually kind of consistent with the notion that developing a hospitality program or developing a robust recreation program were lower priorities, because to some extent the economic value will be driven by two things: care and protection of the land, which you've said clearly we will do, and or increasing revenue streams, so that somebody who might look at the ranch someday says, well, I'd pay X because I get a revenue stream of Y. And so, does that make sense? I was thinking putting lesser just meant we would do all the things we said about finding competent operators, working closely with them, protecting the health and productivity of land, and that would have its own flywheel on economic value, but we wouldn't do things like invest $5 million in some new program that would generate revenues that would increase value. To me, that was a distinction.
But I do look at that and I think of somebody, a commissioner 3 years from now, reading this and saying, what were they thinking?
Okay.
And Greg, is it fair to say that we haven't committed that we're doing this in an as an RFP yet, but I think these are things that you would ask responders to address in an RFP. Is that that's how I'm looking at this, rather than it being a binary trade-off of like, what would you pay for a career development program? Just, I would write the RFP in a way to say, hey, respondents, we'd be interested to hear what you want to do to help support the next generation of ranchers. Or respondents, we want to know how you believe your actions are furthering the economic value of this asset. Is that, am I stating that right, Greg? Is that a way to think about this, or no?
Yeah, I think it is. I also, from staff standpoint, if and when, I think we'll write an RFP whether we're negotiating directly with Box T or not. Because I think whoever we're negotiating with needs to clearly understand what it is we want. So whether you call it an RFP or a scope or something, we will write this all down. And to me, this, as a starting point, this would be guidance to staff as to how we try to organize that RFP. And as you just said, what we place emphasis on as a given versus what we might place emphasis on as a nice to have, must have versus nice to have, kind of a.
Maybe to that point, Greg, in the overarching statement about what we expect from Chico Basin, that we talk about increasing the economic value. And if we believe that's a given, then we can put the other things as specific sub-goals. Because I think we all agree that one of our decisions for holding it and hoping it increases in value, and at the same time recognizing the stewardship components, we all had in mind that we believed it was a reasonable economic decision.
Okay. So I think I'm hearing we should move increase total economic value up to greater emphasis on, or was it to sort of middle emphasis on?
Commissioner Heath, I think you said sort of as an overarching.
Yeah, I think it's like, that's just absolutely, I mean, I think with any of our assets, we're trying to increase the economic value. So.
Right. And I think by the way we have it here, if the public looked at it and saw it as lesser emphasis, I don't think it sends the right message. I think we need to have some place where, of course, we always take very seriously that responsibility.
Okay.
Greg, I think you may have put it lesser because you were thinking about a financial investment made by an operator. And I think
we're looking at,
okay.
Yeah, no, I do. I think some ways you would increase total economic value means you would deliberately invest funds to get certain additional outcomes. But I think I understand what you're saying. And it also triggered a thought, which is a lot of the things that aren't listed here that we just talked about, sub-goals, it doesn't mean they're not important or that we won't find a way to capture them. A lot of them can nest under these. I guess I'm sort of looking for the headings. And as Bill alluded to, trying to figure out what a must-have is versus is, as Gary said, as Commissioner Butterworth said, if an operator is capable and wants to take something on and has the financial resources and the inherent capability to do it, we may not tell them no, but it's not something we're going to let get in the way of running a productive, successful ranching operation.
I mean, is it captured maybe like, I hear you saying making investments, Greg, and I'm thinking of like I&D funds or, using using state land board capital to generate, to either to build infrastructure or generate other new opportunities. Is that?
Yeah, yes,
Maybe,
I think there's, and maybe if you all think there's a third way, I will to explain my thinking. I think there's only two ways you can increase the total economic value of a ranch. You take care of the assets so that the values and physical structure are all in the best possible shape. The second way would be revenue or physical facilities, straight up potential revenue stream, something that they're willing to invest in. Those are the only two I can think of that deliberately increase economic value.
Greg, if you're looking for some editing on that third item on greater emphasis, increase, hold on, I lost it just a minute. The health and productivity, I think it was. Is that duplicative of some of our other things? I see that as.
Commissioner Heath, you might need to re-ask that question. Greg dropped off for a moment.
Greg, you've gone to lunch when I asked my most important question. No.
Sorry, I'm back.
No, just up on third on the part about greater emphasis. It says ensure the long-term health and prosperity. I'm not looking at it right now, but I'm just saying, you know, is that duplicative of some of the other things we're trying to say?
It
anyway,
could be.
I know better than to mini edit here, but just suggesting that.
Mm-hmm.
If that adds anything additional.
Okay. I'm trying to get it. Yeah, I'm having some trouble getting it to come back up. I can look at that.
Greg, I missed a hand raise earlier from Duke Phillips. Did you plan to invite them to make comment today?
I think it's up to Commissioner Butterworth if he would like to do that.
Well, sort of let's run our sort of comments or feedback for you to ground, and then.
Greg, we're not seeing your slides now. I don't know if you intended to have them up there.
I can put them back up if you would like to see them, or is that what you would like me to do?
Or are we done?
Yeah. I think we might, well, let's go ahead. Was it Duke? Duke who wanted to make comment? Or Duke the fourth?
Duke, we saw a hand raise from Duke earlier.
Okay.
And Duke, you'll have to unmute yourself from your end.
Hello.
Hey, Duke.
So is this, I'm just wondering, I have several comments. I don't know if this is the right time, or is it going to be something that we do after the second part of the meeting?
Yeah, Greg, maybe, I mean, we're at 90 minutes, which we had allotted for this discussion. What does part two look like? And is that more?
Part two, I think, is not going to touch on the goals any longer. I mean, this was the end of the sort of conversation around goals and goal setting.
Okay. Duke, were your comments around sort of our conversation around goals and priorities, or?
They're pretty much related to the discussion that you have been having now.
Okay, go ahead.
Okay. One of the things that struck me is that we're talking about a lot of things that are in existence now on the ranch, such as should it be a model ranch? Should there be an education program? Should there be career development? Should there be community outreach? And I can't help but think that if we had not developed all of these things and others, that they would not be central topics to the conversation today. And so as we talk about putting this up to competitive bid, you're essentially talking about taking an existing programs, existing networks, existing staff, a machine that's running, it's got gears or synchronized, and trying to find someone else who would start from scratch and try to duplicate or try to do a version of that. So I just wanted to point that out. Another aspect to that is that since we have been doing it for a long time and it's part of our organization, the cost of these things such as career development, K through 12, trying to create a model that can be used by other ranchers. It's less costly, and we would be willing to do many of these things at no cost since they're already part of our program. To talk about that further in meetings with you as we talk about the future. I also want to talk, just respond to the idea of conservation of land stewardship. By all accounts, from people that have been brought before you as experts, keeping the ranch intact is a unanimous, is unanimously thought as being the best for wildlife and the best for the land stewardship. And it's also, from an economic standpoint, greatly advantageous to have economy of scale to be able to create projects and have one person wearing multiple hats. So dividing the ranch up has not been talked about, but I believe that keeping it intact is extremely important for those reasons. You talked a little bit about business diversity. One of the important aspects that has not been discussed today is that business diversity supports land stewardship. So if we're in a market downturn, or if we're in a climatic downturn, any revenue that we can create through a different business, such as a leather shop, hospitality, that revenue will support taking animals off the land so that we are managing for the welfare of the ecosystem. We would also just like to make sure that you understand that we are very willing and prepared to pay a rate that is competitive, that's based on competitive bids. One of the things that we have, there's two of the projects that we do, the public access and the career development is probably the most popular, the most commented thing that we do alongside the education K through 12 by ranchers and by the public. There are very few programs that take young people from anywhere in the country and put them into a program where they become leaders in ranch management. There's very few programs where you have the number of kids that come to learn about ranching, about the role ranching plays in stewardship of the natural resources. So those don't seem to be a very high priority from today's discussion, but I can tell you from the public, from other ranchers that come to visit on field days that we have, that those are the two things that we get the most compliments on. I think that's all that I have related to the conversation that we've had. I'm happy to answer any questions or elaborate on anything that I've said.
Okay, thank you, Duke. Any questions or comments for Duke? I'm sure there may be some. We'll keep you on board here. Greg, what is, do you have a sense like this second part, which I know is important, you think about a half an hour maybe?
I can try to do that, sure.
That would take us to noon, take a maybe 15, 20-minute lunch break, and then we can start the public meeting. Just for those who are on, maybe if we can try to work to that time frame. Does that work for our commissioners? Does that look good? Okay.
Do you have a slide up?
Yep.
Chico Basin Range. Okay. So, commissioners, for the record, Greg Okish, Assistant Director. This part of the conversation and is really sort of building on some comments and some feedback you got from Box T partners and members of the public last month, and staff felt information and ideas tend to be sort of flexible as you first hear them, and then the more time goes by, they get a little brittle, and you can get sort of lost.
We lost you, Greg.
Okay, can you hear me?
Yes, now.
Okay, I'm going to try one more time. If this doesn't work, we might have to just try something else. Let's see. Sorry about that. Okay. Slides up?
Yep.
Okay. So what I was saying is staff wanted an opportunity to share some additional information with you before some of what you heard last month maybe became, a given or a fact. But the question that we're wrestling with, and the whole issue of process and how do we offer the ranch for lease, has to do with how do you determine the value of a lease. And we don't think you can determine the value of a lease if you go into the conversation with a preconception that there's only one party who will lease it and there's only one way to lease it. And so I'm just going to touch on some of this. We, as I mentioned earlier, you've already decided that you will hold the ranch in its existing configuration. Next month, we'll talk about what rights are being leased. But the conversation last month started to drift into a little bit of, well, how do we lease it? Should we just negotiate with Box T? Should we have a competitive bid? Should we not? And so first I want to remind you, we're not making any decision about that today. In fact, we aren't for a couple of months. But I thought it was worth talking about some of staff's thoughts on why we would explore putting it out for RFP and accepting bids in a variety of ways. So
Greg,
again, the ranch.
Greg, let me just, I don't know if this is the right place, but I do want to acknowledge that quite a large volume of public comment has been submitted, I think, on this topic. And
yes,
I just wanted to acknowledge that commissioners have received that as part of their board packet, not only this month, but in previous months around that I think many addressed sort of an opinion on that relates to this discussion.
Yes, thank you for bringing that up. So we know where it is. I do want to suggest that there are some things we could agree are givens or facts because it's important to the conversation. One is that the ranch, in terms of natural values, the ranch is not homogeneous. It's not the same. It varies significantly in terms of soils and water and vegetation and wildlife habitat. And the physical improvements are similar. There are physical improvements in terms of homes and outbuildings and corrals and watering system and fencing that are dispersed across the ranch. And I'll touch on this in a minute. I want to remind the commissioners, it's been, although we got some clarity, I think a little in the previous conversation, depending on how you decide you want to support young operators, a family ranching operation is supported by somewhere between 5,000 and 6,000 AUMs. The Chico Basin Ranch is 22,000 AUMs. And so if this is important, and it may not be as important as I thought it was before I put this together, there's an opportunity here to support more than one operator on this state trust ranch or state trust land. And finally, staff would like to suggest that there's more than one way to achieve desired ecological outcomes. And sometimes we learn more about the ways they can be accomplished by talking and working with a variety of operators than we do with a single operator. A few months ago, staff suggested that there were scenarios in which the ranch could be offered for lease in more than one part. And I'm going to touch on this briefly for context. We suggested that there was Ranch 1, and this goes back to what I just told you about natural values, ecological conditions, and physical improvements. You, as a group of commissioners, the part of the ranch you toured is essentially this line. You've seen something 3 or 4 or 5 miles long and 1 mile wide. And the ranch consists of a lot more than that. Ranch 1, which you've seen a little bit of, is could be about 43,000 acres and 11,000 AUMs. That is just about the same size as 3 of our other large ranches, individually, not collectively. The Bohart, the Brett Gray, or the Chancellor. Ranch 2, oh, I'm sorry, I was going to go back. And the blue lines here are watering system. The black dots are roads. There's this is where the corrals and the ranch headquarters that you saw are. There is 1 residence on Ranch 1. Ranch 2 is 23,000 acres. That's about the same size as the Lowry Ranch. It supports a family scale ranching operation. It's 6,000 AUMs. Ranch 2 actually, again, has a self-sustaining or water system. It's fenced. It has actually, I believe, 3 homes on it. And then Ranch 3, again, about 21,000 acres, very similar in size to Lowry, almost 5,000 AUMs, supports a family scale operation, although this ranch does not have a home on it. So somebody who ranched this might live somewhere else. They might live off property, but they could run a sustainable cattle operation on this property. And the reason that's important, again, is why might we offer this for competitive bid and in multiple parts? Well, staff's position is it's the only way to understand what the value is, whether or not you lease it that way at the end of the day. So it allows you to determine whether or not the economic value of the ranch is homogeneous across 3 parts or radically different across 3 parts, greater as a whole or lesser as a whole. The final lease configuration isn't predetermined. We could put this out for lease and ask people to bid on 1, 2, 3, or all 3 parts. It facilitates a robust response, which I will get to in a minute. I think very importantly, it does not exclude Box T partners. And as we talked in length, I think in the write-up, I would expect they would probably be able to offer the most compelling bid for all the reasons that Duke just explained. But lastly, and I didn't put a bullet up here, it allows the board to make an informed decision. I think it gets back to transparent, fiduciary responsibility, all of that. It allows you to make an informed decision about the value of the ranch and how you choose to lease the ranch. And so as a bit of sort of background, because I heard some conversation, I think staff heard conversation last month about why a 25-year lease might be required and those kinds of things. So I just very quickly want to show you what's happened the last 4 times we've leased 3 of them. We've acquired or leased a ranch in very poor condition, just like the Chico Basin Ranch. The size was smaller. The lease term in every case was 10 years. In 3 of the cases, the lessee did not have 118 rights. They made their bid knowing they could not match a competitive bid at the end of 10 years. The lease included very explicit considerations for stewardship. And so when we did the Lowry Ranch, for example, we had 50 interested parties. We had 18 qualified bids. And at the end of the day, the premium over the standard grazing lease rate at that time was 43%. Chancellor Ranch was similar. We had, 100 interested parties, 54 bids accepted, a premium achieved, no 118 rights, very explicit stewardship consideration. Sherman Creek Ranch, quite a bit smaller, 12 bids accepted after having 50 parties tour the ranch. Again, a significant premium. Big Springs, which is kind of a different animal. These folks, this ranch did have 118 rights. It was competitive bids and they were able to match. The match was 130% over our standard rate. And I would probably say, to be fair, we did not have above and beyond our normal expectations, explicit stewardship considerations. So when we competitively bid, these are the results we've seen. 20 years ago, when we competitively bid, Chico Basin Ranch, and I talked to some of the commissioners, I called some of the commissioners who I happen to know who were on the board at the time to confirm some of this. I cannot find a written record of it, but there were 3 interested parties. It was Box T, it was a collection, aggregation, partnership among 4 or 5 local ranchers who individually did not have the wherewithal to manage a ranch this large. And it was Box T, a partnership of ranches, and Nature Conservancy. And we think that had a lot to do with the scale, that there are very few people who can bring the financial resources to bear to lease an 86,000 acre ranch. We achieved no premium over our standard grazing rate. And clearly there were nuances. The board was asking for education to be part of the package, but there was a 25-year lease being offered. And so staff's concern is, how do you create a robust response when this is our experience with the track record? So that's one data point. We also wanted to share with the commissioners that on every one of these previous competitive bids, somebody hasn't won. We've been successful in getting 3 extraordinarily good on the top 3 operators that we would be happy to have running any of our ranches. That left people, the number 2 bidder in every case, and sometimes the number 3 bidder, who we would be thrilled to have on a state land board lease, who are still looking for state land board leases. These are people who also bring things that we like to have, multi-generational presence in Colorado, people who have been operating on Colorado ranches for over 100 years. They're looking for ways to expand operations. They're transitioning their ranch to the next younger generation. They have experience in recreation and hospitality, and they've been recognized by industry and the land board for their innovation and leadership. And so I share this not to take away anything from Box T Partners. I think staff was getting the sense that last month the commissioners were starting to think there was only one possible entity who could do this on Chico Basin Ranch, and staff just doesn't believe that's correct. So we want to leave you with this message that there are others. And then this becomes the crux of the issue. We could sit down and simply negotiate with Box T Partners, and we could do our best to get, quote, a market-based lease for the agriculture, but that's what we've been doing for 20 years. And this is what it's resulted in. for the last 3 years. And I don't think it's staff's fault. I think it's an impossible position to be in when you're trying to negotiate with a single party and figure out what the best outcome is. So the negotiated rate on the Chico Basin Ranch for the last 3 years has been $14.03. And in the meantime, our standard rates are adjusted by the board. And so in this period of time, our standard rate and the ranch goes across 2 counties. We've ended up below the standard rate for the last 3 years in every case. And what that's resulted in, is add these together. In this period of years, staff left $25,000 on the table per year. In 2020, we're leaving $60,000 on the table. We've been consistently behind the curve when we've tried to negotiate a quote market-based rate. And so I just think we failed at it, and I would hesitate to suggest it's the best way to proceed. And then finally on stewardship, just a few more slides. You heard a lot, I think, last month from members of the public, I think primarily from the birding community, which doesn't make it any less valid. I just think they've been very organized in giving you their responses. But the notion that Chico Basin Ranch is managed in isolation and that managing it as 3 pieces can't be done is simply, from staff's standpoint, incorrect. As I pointed out earlier today, the Chico Basin Ranch complex, if you will, the complex of state trust land in this part of the state is 250,000 acres. We manage it under 10 grazing leases today. Those lessees, as I said, have been recognized by industry. They've won some of the top awards from industry in terms of their stewardship, and by the land board. And I detailed that in the memo we gave you. Their leases have clear stewardship expectations, and they've met or exceeded those expectations. And working with multiple people has given us opportunities to do stewardship in ways we never thought of before. We've had lessees who have said, well, I can get you from here to there this way. And in fact, it's got advantages. Why don't we try this? We've learned an enormous amount. So in this complex of ranches, we have the Chico Basin Ranch, and we have a tremendous lessee on it. Again, I'm not doing this as a comparison to anything that Box T is not doing well. I'm simply trying to communicate that there are others who do it equally well. The Bohart Ranch is 50,000 acres. It's leased by the Nature Conservancy. Frost Ranch, these were our lessees of the year a few years ago. Frost Ranch is 23,000 acres. The Hannah Ranch is 11,000 acres. These are all people who operate innovatively and successfully. 2 of these properties are in the Stewardship Trust. They clearly get just as much scrutiny as the Stewardship Trust portions of Chico Basin Ranch. And staff is extremely confident that if there's a benefit to the board by operating the Chico Basin Ranch in 3 leases, it's going to be no more obstructive or just as transparent, to put it another way, in terms of wildlife, bird habitat, and other positive stewardship outcomes as it is today. There's just no question that that's what we do. It's the way we manage landscape in large aggregations across the state. So I want to go through this pretty quickly, but in terms of organizational excellence, we talked about this earlier. We want to be fair, reasonable, and transparent. Justin is getting inquiries from other operators. What we do and how we do it with this ranch will be under the spotlight from industry, community, and from certain areas of the political sphere. And so I just want the commissioners to bear that in mind and not get too locked into a certain outcome or a certain way that we should proceed before we get all the way through this process. So, and this was simply to say that there were a number of goals under communications and outreach, and it's not time to talk about them today, but I think, we've got to put this all together over a period of the next 2 or 3 or 4 months before we decide the best way to approach it. And we wanted to, after last month's comments, in particular from the public, about how certain things couldn't be achieved or this was the only way it could be done, temper that a little bit before we continue through our process of decision making. So again, we've made one decision. We started to drift into the third one, which is totally understandable. It's hard to sort of keep these totally separate. So we simply wanted an opportunity to give you some more things to think about in terms of how's the best way to lease it. But next month we'll be back and we'll talk some more about what rights are being leased, and as this explains, how many of those are revenue earning potentially, and how many might be non-revenue earning, or we might even have to invest in to make them happen. It's all still on the table. Your input today was very helpful in terms of giving us staff some insight into your thinking, and I really appreciate the time you spent on that. And we'll be back at it next month. So I can answer questions on any of this, but I know we're running well behind. Just in summary, the Chico Basin Ranch landscape is large and diverse. We staff and have a responsibility to make informed decisions. We need data to do that. A public RFP process does not exclude, and it's not meant to exclude Box T partners, and it also doesn't predetermine a lease configuration. It simply lets us know what the ranch is worth in various configurations. We have, I know, numerous parties with exceptional qualifications. Whether or not they're interested in this opportunity, we don't know yet, but there are a lot of people we'd be proud and happy to have on this ranch. We believe outstanding stewardship outcomes can be achieved across multiple leases and in different ways. And we just want to make sure that we're not criticized before we're done for not being fair, reasonable, and transparent. So with that, you're probably tired of listening to me today. I do appreciate all your feedback, very helpful, and I hope the survey was helpful to you as well.
Thank you, Greg. Let me, Commissioner Heath, before you get there, I was remiss in thanking you and Kristen for putting together, not only putting together the survey, but then in short order, pulling together a coherent and helpful discussion in very short order for today. So I think I didn't know how we were going to get there. I didn't know how we were going to be able to weigh in and sort of collect thoughts. So I thought the previous conversation and exercise was particularly helpful. So thank you. Commissioner Heath?
Yes, Greg, on the slide you showed us where you showed comparables for rates, did that factor in what I thought? Yeah, do you want to go back just a couple so we can see what we're talking about?
This one?
Did that factor in the discount? No, it was the other one you just showed just before that.
Oh.
No,
yeah, there you go. Did it factor in the discount that we gave Box T in those years? As I read the instructions to them when they got that lease, it was to build an education and outreach program for K through 12.
Thank you for asking. The offset that the board chose to provide to support the education program was to charge no rent for the recreation uses. So the agricultural lease rate was not, I'm going to say, in my understanding, discounted in any way. That the offset was the relationship between no rent for recreation and hospitality, and in return, that money gets invested in education. So these should not, I guess the short answer is no, it doesn't reflect that.
Thank you.
Let's see, any other comments? I guess, Greg, I don't know what would be helpful, and I'm curious how other commissioners, we really haven't asked the question or teased out sort of how other people are thinking. Is there a sense amongst our commissioners that that from everything they've seen right now, leasing it as a single entity. Are they interested in sort of 3 ranches? What are the concerns? I mean, I agree with you with the sentiment about, how do we understand the true value and interest and possibilities without going out for an RFP? I think, for me, I'd be interested to see what the interest is, and I think you've made a very clear point that doesn't eliminate Box T. And unfortunately, when I guess I'd also acknowledge, any sort of a conversation about doing anything other than renegotiating with Box T, I feel like comes across that we're dissatisfied or that they've done something wrong, or we're looking for the new shiny new operators or something like that. And that's not how I view this. It's more a function of just, we have an opportunity to really assess what the asset's value is, and is the value in a single ranch? Is there greater value holistically, taking into all of the things we just discussed, in engaging, in making it 3 ranches? So my concern is sort of a broad RFP, call for requests, and hey, you can come to us, you can bid on 1 ranch, 2 ranches, 3 ranches, in a variety of configurations, is, if we end up that in fact, Box T's bid and their ability to steward this in the most effective way, do we open ourselves up to any sort of criticisms or criticisms in the end? And I guess, if I liken this to say an advertising agency or a CPA, organizations go out to bid to test the waters, and quite often renew because their partner, the advantage of staying with their partner, for a variety of reasons, is greater than the risk associated or the allure of finding somebody new. There's a lot in my comment. I think I started it with a question, but what would be helpful to you, Greg?
Well, I want to make one point, and then I'll answer your question. I should have said on this, you said, are we open to criticism? In no case on this, except for the Big Springs, which was a competitive bid with 118 rights, so they had to match to keep the lease, we did not accept the high bid on any of the 3 ranches at the top of the list. We accepted the bid that was the best combination of stewardship outcomes and revenue and operational expertise and confidence that somebody could achieve our goals on the ranch. So again, I'm interested in any comments you want to make. We're not asking for any decision. We just wanted a chance to share some additional information with you before some of what you heard, last month became solidified as, the only information you've been given. Yeah. So we can, if I'm interested in comments, but we can also just move on. This was meant as an informational piece. I don't know if you have members of the public who want to comment, so it's up to you.
Yeah, I don't know. I wasn't planning on taking public comment. We do have the Phillips on board, but I'm more interested in hearing from commissioners because, there was I think it would be helpful. I don't want staff to be doing undue work and rooting around if our commissioners are in a place where they're like, we've got a partner. Everything we've heard, we have the ability to negotiate separately. I don't see a lot of the comments that we've received publicly, albeit they're almost all from the birding or conservation community, it seems like, that's my read. Haven't seen a lot of comments from ranching community, so I don't know what their opinions are, but the conservation, birding, natural resources community has been that, you know, we'd be doing significant harm by you know, fragmenting the ranch or carving it up into 3 pieces. And I think I appreciate your presentation today to talk about, you know, you can slice this a number of ways, and if we did create 3 ranches, it doesn't mean that our ability to manage to high levels of stewardship excellence will be compromised, and that we will not be able to achieve that. So, but anyways, commissioners, any thoughts around that? And again, we're not making a decision today, but I think it would be helpful just sort of where you stand.
Commissioner Shaw,
Yeah.
I thought that this second presentation was very helpful in that it laid out a rationale for direction we could proceed with. So thank you for doing that.
Gary, this is Commissioner Heath. I'd be interested in my colleagues weighing in about their feelings about going out to bid, whether or not we should ask for competitive bids. And I'm not weighing in on about whether that would be 1 or 3, but I'm just interested in their feelings about, and in large part because of public perception, transparency, whether they feel like we need to go out to bid. And I'm saying beyond just negotiating with Box T.
Sure. Do you want to share your opinion?
Yeah, I of course, I'm incredibly impressed with Box T, and I know how important it is to have a good operator. At the same time, I think for a piece of property this large, that's had a lease for a long time, that we almost must meet the public scrutiny test by putting it out to bid. Doesn't mean Box T complete, but I'm of the feeling that we would need to.
Yeah. Okay. Thank you. Commissioner Carney?
Yeah, I mean, I'm the same way. I feel Box T is amazing. They do a great job, and it says a lot that they were willing to take this on 25 years ago, but they also knew at the end of that 25 years, which we're approaching, that wasn't a given that they would get this ranch back in. But I do think, even though if we do put it out to a competitive bid, you know, I feel like that's our obligation to the school children to see what we can get for it and what's out there. But I do feel that Box T has a competitive advantage also in that process, because they know the ranch, we know with them what we have in them, and then they also know the different what they can give and what they're willing to do. And I think that's that kind of gives me a peace of mind about it, that they kind of do have a little bit of an advantage against other bids.
Yeah, thank you. Duke the Fourth, I see your hand raised. We'll get to you. Commissioner Scanlon?
Yeah, I would echo others' comments. I think we have an obligation to put it out there. I was sort of intrigued, Gary, with your idea of 1, 2, or 3. I am leaning towards keeping it. I would give more credit towards the 3. Keeping it as 1 ranch, mostly because I think it's such a unique property for us, and its size is one of the attributes that I actually think is of value. That said, I agree with Tyler that doesn't, in my mind, that doesn't prohibit, if we do that check out in the world, it doesn't necessarily, and tell me if I'm wrong, Greg, prohibit us from then prioritizing a conversation with Box T because of all the reasons that others have mentioned.
Yeah. Okay.
I don't. know if I can answer that. That might, as we get into the details of this down the road, that might be a better question for the Attorney General. But clearly, I think if we write the RFP, I anticipate that you all are interested in. I agree with the comment that was made, which was Fox Tea Partners is going to have an extraordinarily sort of opportunity to, based on all of the experience they've got on the ranch, to be successful in the process.
Yeah. Okay. I get just to be clear, I'm supportive of a broad RFP process and am keeping an open mind to a variety of possibilities. I think, you know, the concerns about fragmentation and the impact to wildlife and to, you know, the natural values on the ranch are critically important, and that will, I think, those factors, you know, will certainly be important for me in any bids or proposals that we see. But I think I've not seen anything yet that says that considering an alternative to operating this as anything but an 86,000 acre ranch would compromise that ability. So Duke the fourth, you can unmute yourself and share your thoughts. Welcome.
Well, thank you. I'll keep it very brief. I really appreciate the opportunity to talk. And this is just a couple points on the splitting the ranch on top of the what we believe the conservation shortfalls it would create. But I believe the person that leased the Chancellor also leased the J.E. Canyon and has their own ranch to the east. The J.E. Canyon and the Chancellor, I think, are both 50,000 acre ranches. And I'm not aware how big the private is, but that he basically created a huge block. So it's not a standalone state lease. The other thing, when you look at the drawings of the map for Ranch 1, 2, and 3 on the Chico, Ranch 1, that person would effectively be out of business in a year like this year. It's so dry from our headquarters south. They're either feeding their cattle or their cattle are shipped. Ranch 2 is about 50% in the same boat, so they would be either destocked quickly or feeding, and Ranch 3 would be the only part of the ranch this year that has received kind of adequate moisture to sustain the full stocking rate. We have been destocking the ranch, grazing very conservatively through the year, amalgamating our herds, trying to maximize rest, which is one of the major benefits of economy of scale. So those are just my 2 comments. I appreciate the time. Happy to answer any questions.
Thank you for that insight. Appreciate it.
Thank you.
Any questions for Duke? All right. Any other comments before we break? Commissioner Heath?
No, I don't think we heard from Commissioner Shaw. I'd be interested.
Oh, I thought, yeah, go ahead, Commissioner Shaw.
I started the conversation, I think, with appreciation for what the staff put together to give us an idea about the scale of ranches.
Yeah, I think he had said, Greg had sort of put forward, he was sort of aligned with Greg's thinking about the process and
that's correct.
Moving in that direction. That's what I understood. So what do you guys want? 15 minutes, 20 minutes, a half an hour? Commissioners, what works?
15 minutes. We've got a big agenda for the afternoon.
Does that work? 15? Okay, 12:15. See everyone back here.
Bye.
Thanks. Thank you to the Phillips too.